So ready? Shall we start, everyone? Loudly. Happy morning. Very happy morning. Yes, we will start. Happiest morning. See, today we will be revising what? AS12. What is AS12? Accounting for government grants. We are touching all the core concept with full conceptual clarity, where we used to study in our regular class with what? Bare accounting standard. Along with that, I will be discussing conceptual question as well as what? Important past year questions. Clear? Point number 1. For any given standard, when we start, what are the 5 things that are common for all the standards? Number 1 is what? Objective. Number 2, scope. 3, 4, recognition, measurement. 5 will be presentation and disclosure. Generally, these 5 components will be there in any particular standard. Correct? What we are learning? AS12. What is AS12? Accounting for? Before we go to objective, scope and all, first we have to know what is the meaning of government grant. What is the meaning of what? You all remember what is a government grant? Government grants are assistance in cash or kind. Come on, what is that? Government grants are assistance in cash or kind given by the government to an enterprise. Why government should give to the enterprise? Because they are what? Friends? No. Why they have to give to the enterprise? Because they would have complied with what? Certain condition. Either in the past they would have complied with certain condition, for that government will be giving, or for future conditions to be satisfied by the company, for that government will give today itself. They are called as what? Government grants. Repeat, what is the meaning of government grant? Government grants are assistance in dash or dash. What is that? Cash or kind. Who will give to whom? Government will give to an enterprise. For what? For past or future compliances of certain conditions. Say yes or no. Okay, I will ask you certain questions. See, for example, Akshaya is there. Akshaya, she wants to start a factory somewhere in the backward areas. What areas are? Backward areas. For that, government is giving what? Grant. For that, government is giving what is that? Grant. Say, for example, government is giving 10 crores. Government is giving what? 10 crores. Even before she started, who is giving the grant? Government is giving the grant as a part of total investment or capital outlay. Correct? Whether it is a grant or not a grant? Grant. Yes or no? Example number 2. For example, Akshaya have already started what? One factory. Already started what? Factory, and she is generating 500 employments to all the people across that particular area. Clear? Who is happy now? Government will be happy. Why government will be happy? What they have to do? Company is doing for the appreciation of that work. Who is giving amount to whom? Government will give amount to that company. Correct? Now already she has complied with the conditions, or now only she is going to comply with the condition? Already she complied with the, then for past condition she is receiving it. Correct? Then it is called as what? Government grant. Then it is called as what? Government can give grant either in cash or in any other form other than cash, like they will give one land, okay, either at concessional rate or what? Free of cost. Clear or not clear? So what is a government grant? Government grants are assistance. What is the meaning of assistance? Help. Tell me, what is the meaning of assistance? Government grant is an assistance in what? Cash or kind given by the government to the enterprise for past or future compliance of certain conditions. What condition? Certain conditions. Correct? We are buying gas cylinders. Correct? After buying, we are getting what? LPG subsidy and all. Correct? What condition? Past condition or future condition? Past. In past, you have got the cylinder. For that, you are getting what? Subsidy from the government. Yes or no? So for past conditions, you are getting the subsidy. Yes or no? So the condition can be either you would have complied in the past or in the future or in the. Correct. I'll ask you a few more questions. You tell me. Clear? Assume you are having a restaurant. You are having what? Restaurant. You are having a restaurant. You are selling food to everyone. In that, government is also coming. For example, say electricity board employees are coming and eating. Clear? And they will pay the bill. Assume every day they are paying 100 rupees. Every day they are paying what? 100 rupees. Each person is coming and eating, lunch they are having, 100 rupees they are paying. Assume 50 people are coming. How many people? 50 into 100 is how much? 5 lakhs. How much? 5,000. How much? 5,000. So every day we are receiving from electricity board employees. How much we are receiving? 5,000. Correct? In a year we will be receiving so much amount. Whether that can be considered as government grant or not considered as a government grant? Why? Because it is in the normal course of business. It is in the normal course of business. Clear? So if there is no difference between this type of amount and the normal trading transaction, then if you are not able to distinguish, then it is not a government grant. Point number 1. What is the other name for government grant? What are all the other names for government grant? It can be called as subsidiary. It can be called as incentive, cash incentives, aid, bounty, subvention. What is it? Correct? Yes or no? Rebate, duty, drawback, they can name anything. Name is important or nature is important for the standard? Nature is important for the standard. What is important for the standard? Nature is important for the standard. Clear or not clear? So repeat once again. Government grants are assistance in cash or kind by received by enterprise. Who will be giving it? Correct. Either for what they are receiving, for past or future compliances of certain conditions. Government means what government? Only Tamil Nadu, Karnataka, Kerala government or any government? Any government. Therefore, they are defining government. They are defining what? Government grant, the definition is this. Correct? What is a government? Government means they are defining. Government means what? Government agencies, similar bodies, whether it is local, national, international. Clear? You remember government means it can be state government, central government or even international government of US, Japan, China, Australia. Yes or no? They are also what? Government. From them also if you are receiving, it should be accounted as per what? AS12 only. It should be accounted as per AS12. Not only government. It includes what also? Government departments, government agencies. What is that? You remember Niti Ayog, CA+B, NABARD and NSDC. What is that? NSDC, National Skill Development Corporation. From them if you are receiving any amount as a grant, that is also accounted as what? Government grant only. And similar bodies. What is that? Similar bodies. That is for example Karnataka, like water control board, pollution control board and national health authority, rural electrification water corporation. Clear? From anyone you receive, even from World Bank. Clear agana? What is that? World Bank, UN nations. Correct? United Nations. Okay? UNICEF, UNESCO, anyone, WHO, from whomever we are receiving, that will be accounted as per what? AS12 only. The moment you satisfy the definition, immediately you will recognize or will not recognize. What is the meaning of recognition? Recording. Recording means what? Passing journal entry. Immediately will pass or there will be certain conditions. There will be certain condition. Here, how many conditions will be there? 2 conditions will be there. You all remember what is the 2 condition? If there is reasonable assurance that whatever conditions were told by the government, if you are able to satisfy. Absolute assurance or reasonable assurance? Reasonable assurance. It is more likely, sir, than not. That is called as what? Reasonable. That is called as what? If you are having that reasonable assurance that conditions attached to the grant will be satisfied. Assurance alone enough, or we have to see from government viewpoint also. See, in the recognition criteria, how the standard makers are thinking is, one from your side, one should be from government side, one should be from your side, one should be from government side. They are telling, array, when you want to recognize the government grant, how many conditions are there? 2. One condition, both the conditions should be satisfied. Both the conditions should be satisfied. What is the first condition? When there is what? Reasonable assurance that the enterprise will comply with the conditions attached to them. This is from our view. Okay, I will satisfy the condition. You don't worry. Only our side, opposite side also we have to see. Opposite side. Who's the opponent now? Correct, government. We have to check whether the government will give it, whether there is a reasonable certainty that ultimate collection of the grant is possible. Yes or no? So this is from our side and we have to verify from government side also. So what is the first one you said? Reasonable assurance that enterprise will comply with the conditions attached to the grant. Second condition. That's why I have written what? One condition of both the conditions should be satisfied. Then I should write and or and. Correct? Where such benefits have been earned. See, this language is from BAR standard. This language is from what standard? Not from ICA book. You have to always write from the viewpoint of what? BAR. If you don't study from BAR standard, mark my word, we are not having control. Those who are able to study BAR standard, where you are able to crack those terms, then we are having control. Then we are having what? Learning from BAR standard is actual learning. That's why I always say in the class, please read the BAR standard. I have taught you how to read, yes or no. So, where such benefits have been earned and there is a reasonable certainty, if the entity is reasonably certain that ultimate collection will be made, then that also tick means then we can pass the journal entry. Then we can pass the journal entry. I'll ask you certain questions. You tell me, assume both the conditions satisfied. What is that? You have already satisfied the condition. Come on. How many conditions are there? Condition 1, condition 2. Correct. What is condition number 1? That we will comply with the condition. Sir, we have already complied with the condition. In past, we have complied, sir. Correct. Immediately we'll pass the journal entry, or we have to check the second condition. What is the second condition? Ultimate collection of the grant is reasonably certain. Yes or no? Sir, we also, we are reasonably certain government will give, sir. In the past, we have done like that. If you are having reasonable certainty, then we can pass the journal entry, or we cannot pass the journal entry. Straightly receipt entry, due and receipt entry. But when you do sum and all, first we'll pass what entry itself? Straightly receipt entry. Since because you are passing receipt entry, it does not mean we are accounting on receipt basis. We have to account government grant on what basis only? Accrual basis. What basis? If you account on receipt basis, if you account on what basis? It is a violation. It is a violation of what? Accrual concept as said in what? AS1. As said in what? AS1. Sir, in past I have complied with the conditions, but I am not certain that government will give or not. I also don't know, sir. Then we have to pass the journal entry. We should not pass the journal entry. Correct. Sir, past I have satisfied. I am also certain. Then we can pass the journal entry. Correct. Actually, what journal entries they'll pass? You tell me. Government grant received receivable. Receivable is a right. Right is an asset. Then what entry will pass? Government grant receivable account debit to government grant, which is an income account. Which is what account? On receipt, what will have? Bank balance will increase. What will increase? Bank balance will increase. Once after receiving, still it is receivable. No more receivable. If it is no more receivable, what we have to do? I'll take one pen, I'll scratch there. Or what I should do? I have to reverse it. Therefore, what is the journal entry? Bank account debit to government grant receivable account. But in exams, we will do this overaction or will not do this overaction. Straightly receipt entry. What is the net entry for these two entries? What and what gets cancelled? GG receivable and GG receivable. That's why we always pass what? Bank account debit to government grant. That is income. Income should be closed or balanced. Close and take it to dash. You remember government grant is taken to which heading of P&L? Revenue from operations or other income? Other income. What is that? Correct. Income side only. But in schedule 3 format, there are only two. Yes or no? In the revenue from operations or other income? Other income. So we have to take it to P&L. We have to take it to, it comes under the heading of other income. It should come under the heading of what? So these are the entries we are going to pass. Since because you are passing in exam slightly this entry, it does not mean we are recording on what basis? Receipt basis. Still we are recording in what basis only? Accrual basis only. What basis? Accrual basis. Yes or no? Point number 2. Sir, I have already received the government grant, sir. I have already received the government has given, sir. But I don't know whether I will satisfy the condition or not. I don't have reasonable assurance. I don't have what? I am not able to assure 50% also, sir. Then if you are not able to give that reasonable assurance, can you pass the journal entry? You cannot pass the journal entry. Above fellows, we have to pass the journal entry not as a government grant, not as a, you have to pass the entry not as what? Government grant. But what entry will pass is bank account debit, because we have actually received the amount. Correct. Then what balance will increase? Bank balance will increase. Bank account debit to, will you treat it as government grant income, take it to P&L, or we should not do that? We should not do that. What you can do is, since you have already received, but you know you are not going to satisfy, any day you will receive love letter from government. Yeah, come on, what they'll say? Love letter means what? I love you, they'll say. What they'll say? Darshan. Refund the amount. Correct. Therefore, we know today itself that we are going to repay. Repayable, repaid. Today itself you are receiving, today itself send it back. It is repaid or repayable? Repayable. Repayable is an asset or a liability? Assets will have what balance? Liability should have what balance? Now what I should do? So what I'll write is bank account debit to government grant refundable. Tell me, government grant refundable, or any name is okay, because name of the account is not important. Nature, even you can write it as what? Repayable to government. Come on, what you can write? Repayable to government. Anything you can write. Clear or not clear? Sir, I have received the amount. I have received the I am also reasonably certain. Okay, I am having the reasonable assurance that I'll satisfy the condition. Then what we can write? Then we can pass the journal entry or we cannot pass the journal entry. We can pass the journal entry. Clear? Sir, I have not received the government grant. I have not received the government grant, and there is no reasonable assurance also that I'll satisfy the conditions given by the government. Then what you will pass? Ghost entry you should pass. Atma and all will read it. You cannot read it. Clear? So in such cases, we have to pass the entry or we should not pass the entry. We should not pass the entries. We should not. Clear? Therefore, they are telling, array, for both the conditions should be satisfied, then you can pass the entry. You have already received. You have already received, and you are also reasonable. You are also having that reasonable assurance that you will satisfy. Then you can pass the entry. Sir, I received, sir, and I am not what? I don't have reasonable assurance. Then you can pass the entry or you cannot pass the entry. Therefore, sir, I have received, sir, but I don't have reasonable assurance. Can you pass the entry or you cannot pass the entry? You cannot pass the entry. Tell me, I have received, sir, I don't have reasonable assurance. Can you pass the entry or you cannot pass the entry? Loudly. Therefore, accountancy says, since because you are receiving, it does not mean you can pass the entry for government grant. Oh, that you are telling, you cannot pass the entry for government grant. You have to pass as a refund entry. Mere receipt of government grant is not a government grant. Tell me, mere receipt of is not a government grant. Still, we have to check what condition. First condition, whether you are able to satisfy the conditions in future. Clear or not clear? Sir, I have received. Mere receipt of government grant is treated as an income, or it should not be treated as an income. It should not be treated as an income. It should satisfy what condition? The first condition. What condition? Clear or not clear? So, to recognize the government grant. Repeat, to recognize the government grant. How many conditions are there, ma? 2 conditions are there. I have written something here. Can you read this? Mere receipt of a grant is not what? Necessarily a conclusive evidence. Since because you received, can you tell to the people, I will pakka satisfy, or still you have to check that? Still we have to check that. Since because you received, we received, ante, we will satisfy the condition. Is it automatic? Not automatic. Not automatic. It is not a conclusive evidence. It is not what evidence? Everyone loudly read this. Mere receipt of a grant is not necessarily a conclusive evidence that conditions attaching to the grant have been or will be fulfilled. Still we have to satisfy that. Clear or not clear? Point number 2. I'll ask you some questions. First, before I go to the next questioning part, tell me what is a government grant? Government grants are assistance in cash or kind. Given by the government to an enterprise for dash or dash. For past or future of certain condition. For past or what? Future compliances of certain conditions. Say yes or no. Means government should help you either in cash or kind. Yes or no. Now I'll ask you one question. Clearer? All government help is a government grant. Not all government helps are government grant. Whatever government helps you, everything is government grant. What help that is satisfying the definition? They are only considered as what? Government grant. For example, listen. For example, Bhumika is having what? She is having one tea stall in Chikmagalur, somewhere in the hill station. Generally, they will not have the tea stall, food, everything she is having. Say, what happened is, till that time a crowd used to come in only in season. But what happened? They have made the roads properly. They have built proper cable cars are there. Therefore, what happens? Elderly people can also travel. Something government has done. Because of that, so many tourists, that has become already it is a tourist place. Correct? Since there were so much development, Karnataka tourism has happened. So what happened? More number of tourists are entering into that particular place. Normally, before this development, she used to earn only what? Say 10,000 per month. She used to earn only how much? 10,000 per month. Because of this, what happened? During that unseason also, what she used to get is people are coming. Yes or no? So because of the development per month, she started to earn how much? 75,000. How much she started to earn? There is a jump of how much? 65,000 per month. Will that 65,000 is called as government grant? Not a government grant. It is help only, no? That help can be accounted as government grant help. Yes or no? No. Why? It is not entity specific. It is not what? It is help from the government only. But the government is not helping you. They are executing their duties. Yes or no? They are what? Executing their duties. So not all government helps are accounted as per AS12. Not all government grants are that government grants which are satisfying the definition of what? AS12. Then only we have to account it. Then only we have to clear or not clear? Hello. Assume, I will tell you one thing. Darshan is there. He wants to construct one, like, flyover from, say, from Bangalore to Tamil Nadu. Okay. So what happened? Two states are there. Correct? Yes or no? And what happened? He is approaching the bank to get the loan. Bankers are like, no, sir, I will give no problem. But to get guarantee from one of the government, either from Karnataka government or Tamil Nadu government. He is approaching one of the government to get what? Guarantee. To get what? Both the governments are happy and one of the government is signing. Okay, I'll sign, don't worry. I'll give you the guarantee. Clear or not clear? Can that guarantee be treated as government grant or not treated as government grant? Cannot be treated as what? Government grant. Clear? You're going to movies, correct? Before movie, when you enter itself, movies will be like, displayed, or first advertisements will be there. Correct? Private organization, brands, along with that government advertisement will also be there. I am Mukesh. Like that and all. Correct? What they are doing, they are promoting not to have the tobacco products. Correct? That is also help. They are creating awareness. Pre-marketing advertisements, advices will be given by the government. Can that be treated as government grant? Not a government grant. Why are you not able to treat them as government grant? Because we are not able to assign a value. Because we are not able to. So two grants, even though it looked like a help, still we cannot what? Treat it as a government grant. Still we cannot treat it as a government grants. Tell me, government grants for which we are not able to, government help for which we are not able to assign a value. That cannot be accounted. That cannot be pre-marketing advices. Correct? Yes or no? Guarantees given by the government. They are not government grants. They are not what grants? Government, like, assistance other than in the form of government grant. The Chikmagalur, I said no, that is, even though it is help, it is not entity specific. It is not what specific? Entity specific. Clear? It is general execution. They are doing whatever they have to do. They are executing their powers. Clear? Not clear? So we will see. All the government grants should be accounted or not all the government grants should be accounted? Tell me, all the government grants should be accounted or not all the government grants should be accounted? They are telling, even though this is the government grant definition, but what is not government grant? Government grant excludes what? Read, those forms of government assistance which cannot be reasonably have value placed upon them. Examples, can you tell me? Free marketing advisors, free marketing campaigns, guarantees given by the government. Clear? They are not government grants. They are not what grants are? And that hotel example I have said, correct? Read the second point. Transaction with the government. Government means it can be what? Government, state, central. See, not only state, central, local authorities also will come into picture. Local authorities means what? Panchayat, municipalities, municipal corporations, yes or no? Any government department for that matter. See, any transaction with the government. Tell me, any transaction with the government, government agencies, departments, local authority, municipalities, like anything. When you do, which is in the ordinary course of business, you are not able to distinguish that with what? Trading or like, regular trading or normal course of business. Then they are not treated as what? Government grant. Then they are not treated as what? Then they are not treated as a government grant. Clear or not clear? Mere receipt of government grant is a conclusive evidence or not a conclusive evidence? Not a conclusive evidence that conditions will or going to be satisfied. Yes or no? The standard, okay, why we are reading the standard? Why there should be a standard for government grants? They are telling, if everyone are receiving, those who are satisfying the condition, people will be receiving the grants. Yes or no? Once you receive the grant, you have to tell to the people that this is what benefit I have got from the grant. You have to tell to the people or not. So because of that, you have to do. Clear? And why the standard is there? No, since people are receiving government grant, we should not allow people to do whatever they want to do. Correct? There should be some consistency. There should be what? Some consistency in financial statement. So, to prescribe appropriate accounting methods. To prescribe what? Who is giving the guidelines? AS12 is giving the guidelines. Who is giving the guidelines? AS12 is giving the guidelines. Clear or not clear? Shall we start reading? Introduction and objective. Number 1. Read. The standard deals with accounting for government grants are sometimes called by other names such as what? subsidies, duty, drawbacks, then cash incentives, aid, bounty, subvention, clearer, it can be anything, clearer. Then receipt of government grant is important or not important for an organization? Significant or not significant? For two particular reasons. One is to prescribe appropriate method of accounting. Next, to give an indication to extent of benefit the enterprise has received because of such grant. Correct? So that everyone will follow that appropriate method. Yes or no? What happens? Because of that, consistency will be there. When there is consistency, what will be there? Comparison will be there. What comparison will be there? We will compare our performance with what others performance. What is that? Inter-firm comparison, and we will compare our performance of previous year with the current years. They are called as what? Intra-firm comparisons. Clear? So this is the object of the standard. This is what? Objective of the standard. Correct? Point number 1. Sir, as you said, 5 things are common. What is the first one? Objective. What is that? What is the objective? To prescribe appropriate accounting method. Second is what? The extent of benefit which an enterprise has received, so that it leads to what? Comparison. It leads to scope. What is the general meaning of scope? Correct? So they are telling generally it is applicable to all government grants except 3. Except what? 3. Number 1, already we know that. Correct? What is the we already know that government help other than in the form of government grant as defined under what? AS12. As defined under what? AS12. Correct? Government participation in the ownership of an enterprise. Assume, for example, Ajay is starting what? One company. He is issuing 1 lakh shares. He is issuing what? In that government itself is buying 20,000 shares. Clear? 20,000 into 10. I have given 2 lakhs to Ajay. The 2 lakh he will treat it as government grant. He will treat it as subsidiary. Then government is treated like what now? Subsidiary or equity shareholder? Subsidy and equity are same or different? Then they are telling, if I participate in the ownership, then I will come under the classification of what? Equity, not subsidy. Equity, not. Then what standard will be applicable for the government is AS 13. What is that? Investments. If it is consolidation, they have to apply. Clear or not clear? Hello. For him it is government grant or liability? Liability. Yes or no? So for them it is applicable. Sir, we understood this. And third one also. What is the first one? Can everyone read that? The special problems. Repeat once again. Arising in accounting for government grant in financial statements reflecting the effects of prices or supplementary information of similar nature. For example, see, when there is a inflationary condition in the country, I have already recorded what? Property, plant and equipment. I have already recorded what? Property, plant and equipment 50 lakhs. I have received government grant of 10 lakhs in the current year 2025-26. In the current year what? Assume in the next year what happened? There is an inflation in the country, say 10%. What is that? 10%. There used to be days in the early 2000, in 1940s, 50s, 60s and all, this US, UK and all, they were doing this inflationary accounting. What is inflationary accounting? Is if there is inflation of 10% in the country, they will inflate what also? PP also by what? 10%, 55 lakhs. Correct? Now against this PP only they got what? Government grant. They got what? Now government grant also they will increase by 10%. That and all you should not. They are telling, I am AS12. Like this, any specific or special problem comes. No, I will not talk. Because what is the situation? How will I predict? That time they will give certain guidance. ICA will also give certain guidance. Follow that. Till that time, what is not applicable for this? AS12 generally does not apply to what? Special problems arising in accounting for what? Government grant in what? Which are reflecting the changes in prices and supplementary information. Clear, Amma? Yes or no? So what we have covered? Number 1, objective. What we have covered? Scope. Definition also we have seen. Yes or no? This will come at the last, as I always say this. Next comes the recognition. Recognition means what? Passing the journal entry. When we have to pass the journal entry, if how many conditions are satisfied? What are the 2 conditions? Number 1, if there is reasonable assurance that conditions attached to the will be satisfied and ultimate collection of the grant is reasonably certain. Clear? So what is also done? Recognition is done. They are actually important. They are actually what? Important. Because government grant questions, there will be 2 types of questions. Straightly they'll ask like a case-based scenario where we have to write the provisions. Where we have to write, you have written the test also, right? First what? Provision-based question will be there, or sometimes that question-based, like no, sum-based. They'll give the numbers, how we have to pass the journalists, that story will be there. Clear? So whenever they're asking, no, you should know how to write this. Clear or not clear? Hello? Shall we start? Listen, ma. Next, measurements. Come on, what is that? Measurement. See, government grants are of two types. One is monetary government grants, other one is non-monetary government grants. One is what? Other one is monetary, means they will give it in cash. Non-monetary means what? Other than cash, in the form of land or any similar resources which are benefiting the companies. Clear? Enterprise. Alright, whenever I say enterprise, always company, or it can be any enterprise. It can be any enterprise. It can be what? It can be any entity. Clear or not clear? Point number one. First we will go with what? Monetary grants. First we will go with what? I want everyone to focus. Ready? Srikanth, ready? See, point number one, ma. Okay, when it comes to government grants, as I said, there are two. One is monetary, other one is what? Non-monetary. This is Bacha. We will go to non-monetary little later. Hero of the entire standard is what? Monetary government grants and refunds. And what? Refunds. Ready, Kana? We will get 200% clarity now. Monetary government grants, it can be relating to what? Specific fixed asset. Next, it can be revenue-based government grants, or it can be in the nature of what? Promoters' contribution. In that, who is the hero? We already know. Who is the hero? Specific fixed asset. What is that? Actually, this is fixed asset, or actually it is termed as what? Property, plant and equipment. But since it is old, no, they are still continuing at what? Fixed asset itself. See, assets can be either depreciable or non-depreciable. Depreciable means what? That which expire. What is that? Expire. Non-depreciable means, example, can you give me the example of non-depreciable asset? Land. Correct. First we'll focus on what? Depreciable asset. We will focus on whenever you are purchasing a depreciable asset. Assume you are purchasing plant and machinery. Using that plant and machinery, you are going to produce huge output at a minimal cost, and you are generating employment. Who is happy now? Government is happy. Against the plant purchased, who will give the amount? Government will give the amount. Who will give the amount? Grant. Now that amount to record, one way or two ways are specified. Two ways are specified. What is the first way in when it comes to depreciable asset? Government grants related to depreciable asset. Government grants relating to how many ways of accounting are there? Two ways of accounting. Number one is what? Adjust the government grant with dash. Second, government grant is treated as deferred income or separate income. Deferred income or, shall we start it? Hello, listen. Read the question, everyone. Success Limited. Hey, in this itself, we know SLM and WDV also. Both I am going to teach now. Listen, read this. Success Limited purchase plant and machinery for how many lakhs? 50 lakhs. Whose useful life is how much? How many years? 10 years. Is there any scrap value in the question? No. If it is there, what you should do? Subtract and find the depreciation with zero residual value. So cost is? What is cost? What is the amount? Now what happened? Since we are purchasing, let us think like Success Limited. We are what company? Success Limited. On purchase of the asset, government has granted how much? You are required to pass journal entries and extracts of financial statements for how many years? 2 years. If government grant is deducted from the value of the asset, or it is treated as what? Deferred income. Lollipop for us, this and all. Point number one, I'll tell you, sir. In exam, they did not say what method, sir. Then you can go with any method. Give what? This is what I followed. Clear? Most of the cases, they will give what method they followed. Especially refund and all, they'll tell. Point number one. Listen. First, what is the method number one? Method number one is what? Government grant adjusted with the cost of the asset. Array, first we are purchasing the asset for how many lakhs? 50 lakhs. When you purchase an asset, what is the name of the asset? Plant and machinery. Array, when you purchase the asset, year number one, day one, what entry we will pass when you purchase an asset? Plant and machinery account, debit to bank account. How many lakhs? PP should be recognized at dash. In this question, what is cost? So, on day one, on purchase of plant and machinery, what is the first journal entry? Plant and machinery account debit to bank account. Now, we are receiving government grant. SRO, when we receive government grant, bank balance will increase or decrease? Bank balance will? When bank balance increases, we have to credit. Correct or wrong? Sir, correct. Who says correct, sir? Jump from here. Clear? Array, when you receive government grant, bank balance will increase. When bank balance increases, debit or credit? So, debit bank account. Debit what? Bank. Correct? Bank account debit to RV. See, the credit depends upon what you are going to do. What is the policy of the company? Here, what they are adopting, adjust it with the. So, instead of writing as an income, I will be writing it as what? Plant and machinery. Actually, I purchased plant and machinery for In that I were reversing how much? 10 lakhs because I spent 50 lakhs. Correct? I spent 50 lakhs and the government is refunding how much? 10. In net, how much only I am giving up? TP should be recognized at what? What is cost? What we sacrifice? What we sacrifice is 50 or what we sacrifice is 40? That's why we are reducing it to what? 40. So after passing first two journal entries, balance sheet, in balance sheet, plant and machinery will appear at what? Sir, we are subtracting government grant here. Income is taken to balance sheet or it is an impact of ledger account. In ledger account, they would have been in the same side or opposite side. Opposite side means what? Multiplier. Integration, differentiation, what is that? Subtract. So after passing these two entries, what is that? Plant and machinery will appear at what? 40 lakhs. Correct? But every time you are required to prepare balance sheet or only at the end of the year? Then why I have written here? For clarity purpose. Clear? Now, my question is, if you provide depreciation subsequently, depreciation should be provided on 50 lakhs or revised carrying amount. What is the revised carrying amount? 10 lakhs. Correct? 40 lakhs. Correct? So, first, when we pass depreciation entry, when we pass what entry? Depreciation entry. What is the journal entry for depreciation? Depreciation account debit to plant and machinery account. Yes or no? Depreciation is dash. Depreciation is what? So now my revised carrying amount is 40 lakhs. There is no scrap value in the question. If you are having any scrap value, subtract that. Clear? Divided by, in this question, what is the useful I have given? 10 years. So this 40 lakhs I am going to use over a period of how much? 10 years. So over a period of how many years it is going to expire? 10 years. Correct? Each year how much it is going to expire? 4 lakhs. Therefore the journal entry will be depreciation account debit to plant and machinery 4 lakhs and 4 lakhs. In this, who is the nominal account? What we have to do? Take it to what? Balance sheet itself. Where? Tell me the journal entry. P&L account debit to depreciation account. Yes or no? See, had this, I will ask you, had this government grant is there, what would have been the depreciation? 10 years means it would be 5 lakhs. It would be what? 5 lakhs. Yes or no? Instead of 5 lakhs, how much only we are taking it to P&L? So in P&L, we are taking only 4 lakhs. We should have actually taken, but we are taking only depreciation is expense. Expense instead of 5 lakh, we are taking what? 4 lakhs. Yes or no? Means expense decreased or increased. When expense decreases, repeat once again, when expense decrease, what will happen? Profits will increase or decrease? Profits will increase. When expense decrease, what will increase? Therefore, they are telling, even if I have accounted separately, even if I have what? Accounted separately, because of this 1 lakh, correct? Because of that, or how much I would have received? Some amount, no, 10 lakh I have received over a period of 10 years, I'll take, correct? Even if I would have recorded this, what would have happened? Profit would have increased. Instead of accounting as a separate income, what I am doing? My expense I am reducing. By reducing my expense, repeat once again, by when expense decreases, automatically what will increase? Profits will increase. Even if I have accounted separately as income, what would have increased? Profit. Even accounting like this, decreasing expenses also what? Increasing the profit. Therefore, here government grant is accounted or not accounted? Accounted indirectly or directly? Sorry? Indirectly by way of reduced depreciation. By way of what? Reduced depreciation. Clear or not clear? So, after this, at the end of first year, if you prepare balance sheet, if you prepare what? Balance sheet. First, how much value we have actually purchased it for what? 50 lakhs. How much government grant we have received? What is the net carrying amount? On this, we are giving what? Depreciation. Prospective basis. What basis? When our carrying amount, useful life, scrap value changes, the changes will be accounted prospectively or retrospectively. It is said in AS10 because of AS5. Because of what? AS5. So that's why we are having a net carrying amount at the end of first year as what? 36 lakhs. We are having what? 36 lakhs. Correct. Second year we will proceed. In the beginning of second year, once again we will pass entry for government grant. What, your CM or what? You are getting government grants every year? No. So for the same grant, you are not required to pass once again the government grant receipt entry. So no entry in the beginning of second year unless you receive some other government grant. Unless you receive what? Some other government grant. End of year number 2. What we will be charging? Depreciation. Entry remains same. Depreciation to plant and machinery. P&L account debit to depreciation. Since it is SLM method, always it will be what? always it will be on the revised original cost. Correct? If that is changing, again prospectively we will do. So generally it will be what? 4 lakhs and 4 lakhs. Yes or no? So P&L account is debited by 4 lakhs. In balance sheet, last year 36 was the closing. From that, reduce what? Depreciation 4. Therefore, what is the carrying amount? 32 lakhs. This is under which method? First method. What is first method? Adjust it with the cost of the asset. But there will be certain people, oh sir, I'm not interested to reduce my asset value. I'm not interested to reduce my. For them, they have given alternative. Yes or no? What is the alternative? Instead of reducing the asset, take it to separate account. Correct? Take it to what account? Separate account. Yes or no? I always used to say no. For depreciable asset, there is a condition, implied condition. What is that? Even without telling, there will be a condition. What condition? Use it till the useful life. Use it till what? Or else they will send love letter. Or what happens if you are not using the asset for the purpose for which you have got, then they will ask the refund. Then they will ask what? Refund. So there is always an implied condition. You have to use what? Till useful life. Till what? Or any other specific condition given by the government. Clear? Point number 2. Method number 2 is what? Government grant is treated as. Then what we have to do, sir, on purchase of plant and machinery, what is the first entry always? Plant and machinery account debit to. Next, on receipt of government grant, bank balance will increase or decrease. When bank balance increases, what we have to do? Debit. Credit depends upon what, which method we are adopting. If it is like, first method, where we have to adjust with the cost of the asset, credit would have been what? Plant and machinery. Now, are we following that or other alternative? Alternative, what we are going to do is we want to show it as a separate income. We have to show it as a. So what accountancy sees is this income 10 lakhs, they are treating it as what? Income received in advance for the asset whose useful life is more than 1 year. Then only it is called as asset. Correct? Whose useful life in this question is how much? 10 years. For entire 10 years, who is giving the amount today itself? Government is giving the amount today. So because government will be busy every year, they cannot give you, no. Correct? For all the 10 years put together, they are giving the amount now itself. This is treated like what? Income received in advance. It is treated like what? Actually, you can write it as what? Bank account debit to income received in advance or advance income. But to give us proper name, specific name, being particular standard, we have to be very specific, no? Then they are telling you can use any suitable name. Then in bare standard, they are giving one example as what? Deferred government grant or deferred income account. Or what income account? This is 1 year income or 10 years income given by the government on day 1 itself. Then this entire 10 lakh, we will take it to P&L of the first year, over a period of 10 years. We have to take it to P&L over the life of the asset. But what is the right language I used to say? In the ratio of depreciation. Tell me, in the ratio of what? Why they will write over the useful life is because in SLM, every year depreciation amount will be same. Correct? So what happens? Useful life and this will match. I will show you now also. Clear? Therefore, what is the entry we are passing? Bank account debit to deferred government grant. DGG. Come on, what is that? DGG. So after passing first 2 entry, if you prepare a balance sheet, plant and machinery is touched, untouched, it will remain as what? 50 lakhs. In liability side, one person will come. Correct? Who is that? DGG. Whether it is an asset, liability or income? Liability. Income received in advance is a liability. Correct? Because we are having an implied obligation that we have to use the asset for that purpose over a period of time. Correct? Useful life. Correct? So 50 lakhs as well as what? 10 lakhs we are having. Whether this will be a permanent liability or as and when we use it, it will be expired. Then we will take it to P&L by passing one entry. Correct? So first year, at the end of first year. Tell me, at the end of first we will charge what? Depreciation for this. Correct, ma? Yes or no? What is the amount of plant and machinery? 40 or 50? Why 50 lakhs? Last method we are having 40 lakhs now. Why it is 50 lakhs now? Because government grant is not adjusted with the cost of the asset. It remains untouched. Therefore, 50 lakhs minus 0 divided by what? 10 years. How much we are having? 5 lakhs. Therefore, every year what is the depreciation? Depreciation to plant and machinery. Plant and machinery account, that is P&L account debit to depreciation account. Correct? In exams, you can write here itself depreciation bracket P&L account instead of passing this entry and all. Clear? But if they are asking journal entries, no, pass this entry also, so that they may have mark, even though don't have that thing that they are. Sorry, if we write like this, whether it is fine. Clear or not clear? So we have to check with the question that marking and all. Clear? So depreciation to plant and machinery, P&L account debit to depreciation. With this we'll stop, or this DGG should be taken to P&L. You remember journal entry, ra? What is the journal entry? DGG account debit to GG. Correct? Entire 10 lakhs I will take, or what is relevant or relating to first year we will take. In what ratio we have to take? In the ratio of depreciation. In the ratio of what? Listen to me. We will see what is the ratio of depreciation. 1 year depreciation, something calculation, amount to be transferred from DGG to GG every year. Point number 1. How many years, ra? 10 years. How many years? Since it is SLM, every year what is the depreciation? Correct, 5 lakhs. So every year depreciation is what? 5 lakhs. Now, why I am doing this? To find depreciation, or along with depreciation, we need to find amount to be transferred to P&L. In what ratio we have to transfer? In the ratio of depreciation. What is the DGG amount we are having? Correct. This 10 lakhs, we have to take it to P&L over a period of what? 10 years. Over the period in which we are charging depreciation. That is because of what concept? Matching concept. Because of what concept? Listen to me. Okay, there is a total DGG of 10 lakh. Entire 10 lakh, shall I take it in the first year, or it depends upon depreciation? Total depreciation is 50. Total depreciation is 50. In the first year depreciation is, means what percentage, ra? Out of 50, 5 lakhs is relating to first year, means what percentage it is? 10%. What percentage? If total amount of asset is 50, depreciation that you are charging to P&L is only what? 5 lakhs, which is 10% of that, which is what? Then DGG also full 10 lakhs, 100% you will take, or you will match it with the 10%. You will match it with the 10%. Therefore, out of 10 lakhs, 5 lakhs divided by total, which is nothing but 10%. 10 lakh into 10% is what? 1 lakh. Clear or not clear? Therefore, every year I will take what? 10 lakh into 5 by 50. 10 lakh into 5 by 50. Since it is SLM, all the years depreciation will be what? 5 lakhs, 5 lakhs, 5 lakhs. S or no ra? So, tell me, all the years it will be what? 5 lakhs, 5 lakhs, 5 lakhs, which is nothing but 1:1:1:1, like that. How many years? 10 years. Like that, how many years, ra? For this year, what I will do? 10 lakh into 1 by 10. Say, 10 lakh into, which is nothing but what? This only people are thinking it as, 10 lakh divided by 10 means they are thinking number of years. They are thinking as what, ra? They are thinking that DGG is taken to P&L over the useful life. Right or wrong? Partly right. What is that? Partly right, provided it is what method? SLM method. WDV method, can you write like that? Then what is the right language? In the ratio of depreciation. When depreciation is 10%, matching to that should be the income. Matching should be what, ra? Clear or not clear? So since it is SLM method, you will have what? Same numbers, 10 years you will have. Correct? So tell me, since it is WDV also we are going to do, no? Say, you will divide by number of years or ratio of depreciation. Repeat. What is the entry we are passing actually? DGG account debit to GG. Next is what? GG should be closed and taken to P&L. How much every year we are going to take it? As per the calculation, 1 lakh. So first year also 1 lakh. Second year also 1 lakh. So since we are at the end of first year, how much we are going to take? 1 lakh we are going to take. Correct? So 1 lakh is going. When you prepare the P&L account, when you prepare what account? P&L. Depreciation, how much you are debiting? Correct? Correct? P&L debited or credited? How much? 1 lakh. Because of what? Government grant. If you see the net, net, which one is higher? Debit is higher. How much higher? 4 lakh is higher. So net debit is what? 4 lakhs. In first method also, net debit or debit is what? 4 lakhs. So you will get what answers? Same answers only. You will get what answers only? Same answers only. Clear? So when it comes to balance sheet, initially we were having how much? 10 lakhs. How much you transfer to P&L? What will be the balance? Plant and machinery touched, untouched because of government grant. Untouched because of government grant. So from 50 lakhs, we will charge the depreciation of what? 5 lakhs. What is the net carrying amount? 45 lakhs. Same will be for year number 2. Same will be for what? Depreciation entries and DGG entries. So at year number 2, depreciation and DGG transfer to P&L. Correct? So at the end of second year, DGG balance was how much we have transferred? 1 lakh. What is the balance? Similarly, what is the carrying amount in the beginning of the second year? 45. Depreciation like this. 10 years if you do. Who will vanish over a period of time? DGG will be gone. Asset also will be gone because zero scrap value. Clear or not clear? Hello, everyone understood? This is what method, ra? Straight line method. If it is WDV method, if it is what method? WDV method. What is the story? We'll see. Read the question. Pioneer Flow Limited purchased plant and machinery for how many lakhs? Having useful life of how many years? 3 years. The company received a grant from state government on purchase of asset. On purchase of what? Asset. Clear? Depreciation is charged at 10% per annum on what method? WDV. That is reducing balance method. So they're asking what? Journal entries and extracts of financial statement if GG is adjusted or it is shown as deferred income. Point number 1. What is the asset value? What is the amount of grant? What is the useful life? What is the first method? Adjust with the cost of the asset. Before I proceed further, if this is the first, if this method is followed, what is the first journal entry will pass? Loudly. Plant and machinery account debit to bank account. How much? Okay. On receipt of government grant, what entry will pass? Bank account debit to DGG. How much? Now, just imagine in balance sheet, in asset side, plant and machinery will appear at 100 or now it will appear at 70. Super. It will appear at what? 70. On 70 only we have to charge depreciation. On 70 only we have to charge what? Depreciation. SLM method or WDV method? Rate they themselves they are given or not given? You remember one thing that time I used to say WDV method in real life someone will give or we have to find. Income tax only rates are there. Accounts and all we have to find. Correct? You remember that? Point number 1. See, as you said, first 2 entries are okay. 70 lakhs is appearing since it is WDV method. Percentage is there. What is it? Percentage is there. 70 lakhs into 10%. 70 lakh into what percent? This percentage is after considering what value? Scrap value. You remember the derivation I told you. So once again, you don't subtract scrap value. So 70 lakhs into what percentage? 10%. How much is that? 7 lakhs and 7 lakhs. So depreciation to be taken to P&L is what? 7 lakhs. So plant and machinery 70. Correct? Depreciation 7. What is the revised carrying amount? Carrying amount at the end of first year is 63 lakhs. At the beginning of second year. Is there any entry once again we have to pass? No. Loudly everyone. What is that? End of second year depreciation we have to charge. What is the journal entry for depreciation? Depreciation account. Debit to plant and machinery account. The depreciation we have to take it to. Now, if it is SLM, always we will apply on 70 lakhs into 10%. Correct? But we are following what? 70 lakhs into 10% or what is the recent WDV? Correct? On that full year depreciation 10%. So 6.3 lakhs, 6.3 lakhs. Therefore, in P&L, in balance sheet from 63, if this goes 56.7 lakhs. Clear or not clear? This is what adjusted with the cost of the asset. Adjusted with what asset? Next second method under WDV is what? Show it as a separate income. As usual, first entry is what? Plant and machinery account debit to bank. On receipt, bank account debit to plant and machinery DGG. DGG. Correct? Now, who will appear in the liability side? DGG will appear. Who will appear in the balance sheet asset side? Plant and machinery at its original cost only. At its what only? At the end of first year, for this 100 lakhs, we are applying depreciation. So, it will come to 10 lakhs. Correct? So, this entry. Fine. Now, DGG to GG. Entries we know. What is the entry? DGG to GG. GG to P&L. What is required now? Amount is required. Straightly shall I write divided by, what is the useful life? 3 years I saw. Correct? Shall I write divided by 3, 10 lakhs I will take. Correct? Why sir is, if in P&L out of 100 lakhs, out of what? 100 lakhs, you are taking what percentage? Like that we should take here also. Then they are telling it should be in the ratio of what? Depreciation. It should be in ratio of what? Depreciation. They are first writing. For this I used to tell one calculation. This table we are going to do in the next standard also. Listen to me. So calculation of depreciation under what method? WDV method, and amount to be transferred from DGG to GG. What is the format I have written? Year, opening balance of plant and machinery, 10% depreciation, closing balance of plant and machinery. This will be helpful for closing balance sheets. This will be helpful for what? This will be helpful for P&L debit. This will be helpful for what? P&L credit. Clear? Once you prepare this table, everything is automatic filling. Clear? Filling the blanks it should be. See, what is the opening balance of plant and machinery? What is the percentage of depreciation? 10. Then what should be the closing balance? From opening balance, you will multiply, add, subtract, integration. What you will do to get the closing balance? Add. Correct? Then it should be 90 lakhs. Correct? Same. What is closing will become opening in the 10%. WDV or SLM method. If it is SLM, always on what? 100 lakhs. Yeah, it is always on what? 100 lakhs. Since it is WDV, on the recent W written down value, 10%. 9 lakhs, subtracted 81 lakhs. Subtracted what? Then 81 will become the opening balance, 10% closing balance. Only 3 years I have given as useful life for computation purpose. Now, how much is the DGG amount we saw? 30 lakhs we have seen. Correct? Entire 30 lakhs we will take it to the first year. Yes or no? Second year fully. Third year fully. We will take it home. What you will take it? Correct? So, in this 30 lakhs, it should be in the ratio of what? Depreciation. What is the total depreciation for 3 years? Correct? Now listen. When I say 10%, not that 10% you should take. What 10% you should take is, what percentage of matching concept, for matching concept, what percentage you should take is, out of 27.1, how much percentage I have taken to P&L as depreciation? 10 lakhs. Correct? Same they are telling, out of 30 lakhs, in what percentage it is going? Same percentage only it should go to what? P&L account. Therefore, 30 lakh into 10 lakh divided by total. How much you are getting? 11.07. Similarly, 30 into 9 divided by. And lastly, always you can find, but make sure that is a balancing year because of small difference will be there, so that it is equivalent to 30 lakhs. That alone you adjust. I told you, remember that. So this we have to do. Yes or no? What is the journal entry for this particularly? DGG account debit to GG. Next GG to first year, how much? 11.07. Second year entry is same, but amount is 9.96. Third year will be, correct? We will see that. Hello? Yes or no? So, at the end of first year, repeat once again, at the end of first year, how much we are taking? So, when you prepare balance sheet and P&L, correct? Balance sheet and P&L, depreciation will be how much? 10 lakhs. Depreciation will be how much? 10 lakhs. You remember 10 lakhs divided by total depreciation of what? 27.1. What percentage went to depreciation P&L? What percentage went to debit side of P&L? Come on. What is the percentage, everyone? 10 lakh divided by 27.1 into 100. What percentage? 36.9? 0%. 9% shall I write? Then GG also should be in what ratio only? That ratio only. Correct? That number 36.9. 27.1 only, no? Okay. Yes or no? Then this should also be what? In 13 lakhs, what ratio only we have to take? 36.9. Just to take your calculators, 30 lakhs into 36.9, how much you are getting? Come on, what is that? That is what we are taking. Clear or not clear? This only, this percentage matching only, we will call it as what? Matching concept, not the amount. Matching concept does not mean 10 lakhs or 10 lakhs. That is not matching. Clear? That is not what? That is called as duplication, not matching. Clear? So matching means percentage or proportion should match. Clear? Now DGG, you are having balance, opening balance how much? 30. In that, how much you have taken to P&L? Here what we have to write, sir? Either you write government grant or transfer to P&L. Anything you can write here. Clear? Hello? Then how much is the balance? 18.93. I'll ask you one question. This 18.93 will take fully to year number 2 or year 2 and year 3 amount? Excellent. Year 2 and year 3 amount. Plant and machinery initially we are having 100. Subtract 10. You are getting what? Same like the at the end of year number 2, that amount we are taking. Correct? So balance. Here how much I have to show? Tell me. By government grant. How much? 9.96 lakhs. Come on, how much? 9. So from 18.93, how much we have taken to second year? 9.96. Balances. This depreciation you do. At the end of third year, depreciation DGG. How much is the balance? 8.97. Take it. After the third year, depreciation by GG. Come on, what is it, ma? By government grant. How much we are taking? 8.97. After taking, is there anything left to be recognized or fully we have taken to P&L? Fully we have taken to P&L account. Clear or not clear? With this, we are completing what? Depreciable asset. We are completing what assets? Depreciable asset. Now, who is having in the picture? What is that? Non-depreciable. See, I also told you that when it comes to depreciable asset, there is a condition. There is a condition, implied condition. That what is the implied condition? That this should be used over the useful life. Correct? But when it comes to non-depreciable asset, will there be any useful life or unlimited life? Then I keep on taking to P and L over what for say infinity. Unlimited means what? Infinity. With infinity, can we do calculations? No. That's why for non-depreciable asset, for what non-depreciable asset, government will not. There will not be any implied condition. We have to check whether government is imposing any condition. Whether government is imposing any condition, correct? So sometimes what happens? Government will give non-depreciable asset, say land. Okay, can land have depreciation? Generally, land have depreciation, no depreciation. Why? Huh? Is there any exceptions? When land can have depreciation? When life is limited. Clear? Listen. Government grant relating to non-depreciable asset. Since the life is not there, we cannot assume one implied condition. We have to check whether government is with giving that land for with any condition or without any condition. We have purchased land, sir, for that government is giving that amount can be with certain conditions or without certain conditions. Sir, government is giving without conditions. Sir, government is giving what? Means, for example, read this without condition. Acquired, we are acquiring a land for how many lakhs? 150 lakhs, and we are receiving government grant of against the land purchase. Means we purchase first, then you are receiving in cash. Don't treat it as non-monetary. What is involved here? Money is involved. When government is giving the land free of cost or concessional, then only it is called as what? Come on, what is that? Non-monetary. Here, monetary amount is involved. Clear? So, assume government is giving 30 lakhs against the land purchase without any condition. They are telling you purchase the land. What are you going to do? You are going to consult school, university. Yes or no? Then they are telling, okay, you are doing good. No, I will not ask any questions. Take it. But if you do something else in future, if I come to know, then that time I will ask you refund. Even though there is no condition, you should not do certain. Since there is no condition, it does not mean you can do illegal activities and all. Then I will not enter. Law will enter first. Yes or no? So even though there is no condition, even though don't think it is not refundable, still it can become what? Refundable if you violate certain things, if you are not complying certain things. Clear? First, land is 150 lakhs. When we purchase the land, what is the journal entry? Bank account. How many lakhs? 150 lakhs and 150 lakhs. Yes or no? Now we are receiving grant. We are receiving what? With the condition or without condition? Then they are telling it is like a bumper offer for you. You are getting one amount without any conditions to be satisfied, without spending any expenditure. So accountancy says, don't treat this income and don't treat this income as business income. Don't take it to P&L. Increase that 30 lakhs. What happens if you put income increased by 30? What will also increase? Profit will increase. What people will think? As if you have done certain business, you have supplied goods or services, because of your effort, profit has been increased. Correct? First question is whether you have done anything. Nothing. Correct? If you take it to P&L, what people will think? Because of you, because of supply of goods or services only you are increasing. Means because of your performance only you are getting. Correct? Whether that is with performance or without your performance, then with that amount can you give it? Can you give dividends and all? No. Correct? Then they are telling, then it is not called as a business profit. Only business profits are taken to what? P&L account. Correct? This is business other than business, which we can call it as what profit? Capital profit. Capital profits can be used to give. Capital profits can be used to give or distribute dividends are not allowed. Not allowed. What is that? Not allowed. What is allowed to be given? Free reserves. Oh, you remember? Okay, so this is capital profit should be taken to P&L. True or false? It should be taken to general reserve. True or false? It will be taken to revaluation reserve. True or false? It will be taken to Chennai to Sathya sir home. Yes sir. Ante, what I will take? Correct? So it should be taken to dash reserve. Therefore the entry will be bank account debit to capital reserve. How much we are receiving? 30 lakhs and 30 lakhs. Clear or not clear? This is without condition. This is what? But you tell me government will give anything without condition. Certain times only it will happen like that. Certain times only it will happen. But most of the cases it will give what? Amount against the non-depreciable asset with certain. You remember government will tell, are you are purchasing land? Good. What are you going to do? You are going to construct schools. One condition. See, take this amount. Take this. Make sure you are constructing what? Public park, botanical garden. You remember? Yes or no? Construct bus stand. Some condition they will give for which entity has to spend. For which who has to spend? Entity has to spend. Then you tell me what is involved here? Expenditure is involved. What is involved? expenditure is involved. Therefore, what is there with condition is there. If it is with condition, what we have to do? Correct? Listen to me. We will take up one question with the condition. Listen, what does the question read? A Limited acquired land for how many lakhs? On what date? 1st April 2023. It received a grant of how many lakhs? From the government with a condition to develop what? Public parks and what? Botanical garden in specified areas. How much? In what rank? Within how many years? I will delete the specified areas, then I'll write it as 3 years because one story is there. Clear? So within how many years we have to do? 3 years time. 3 years we have to spend the amount. Okay. In the first year, actual cost is how much? 20 lakhs. Estimates for year 2 and year 3 is 30 and 50 lakhs. Correct? This you remember, permutation, combination and all will do. I'll tell you one thing. When there is a condition, assume, see, when it comes to depreciable asset, when it comes to what? How many methods were available? 2. We will adjust with the cost or we'll show it as a, here also you can do. What is that? First, what entry will pass? Land account debit to bank account. How much? 150 lakhs and 150 lakhs. Correct? When you receive grant, how much grant we are receiving? 30 lakhs. Correct? If it is method number 1, what entry will pass? Tell me. Bank account debit to land account. Then land value will become now 120 lakhs. Land value will become what? Now, if you show something in what? Balance sheet as 120 lakhs by adjusting in the land. At least in depreciable asset, what we used to do? For that, we will pass what? Depreciation. By reduced depreciation, there is a benefit by increased profit. Correct? People will know then why there is a depreciation decrease. People will ask, we will put it in notes. Now, when it comes to land, for land, will there be depreciation? No depreciation. So they are telling, if you do something, everything like this, no, people will not know what benefit you are getting in performance. Correct? What benefit you are getting in what? In depreciable asset, depreciation decreased, profit increase. Here, if you show something like this, what will not have any impact? Performance will not have any impact. Yes or no? Correct? Even though it is correct. Even though it is what? Correct. But to give clarity to the people, generally they will not follow what method? First method. They will not follow what method? To give clarity for non-depreciable, always they follow what only? Second method. What is second method? To show it as a separate income. To show it as a... Now listen, something I'm going to tell. What is the land amount we are purchasing? 150 lakhs. Tell me the journal entry. Land account debit to bank account. Land account debit to... Now we are not following first method. We will not adjust with the cost of the land. We will show it as a separate income. When we receive 30 lakhs, if it is separate income, what is the journal entry? Bank account debit to DGG account. Repeat once again. Bank account debit to, slowly this DGG we will take it. Correct? If it is depreciable asset, over its useful life in the ratio of what? Depreciation. In the ratio of what? Here can I say something like this in the ratio of depreciation or not possible here? That's why it is called as what asset? Non-depreciable asset. Correct? Then in what ratio, sir? Then they will say, listen, there can be two. There can be two. If it is with the condition, if it is what? With the condition. With condition itself, there can be two possibilities. Government can say, array, this land for next 5 years, don't construct anything. Don't construct. I will tell you certain purpose that alone, don't construct anything on the land. There is a restriction for how many years? Then, if such type of restriction is there, where we are not required to spend anything, where we are not required to, then whatever is the restriction or conditional period, this 30 lakh will be taken over a period of what? 5 years directly. Because what is not there? Expenditure is not there. Then there will not be any expense ratio. Then there will not be any. Clear? Second will be what? Conditions can be, they will say 5 years and all not required. Within 3 years, you construct something where outflows is there. What is there? Outflow is there. Clear? So if they say you have to spend some amount where the condition involves some cash outflow, then we have to take in that ratio. Where condition is not involving any cash outflow, then what we have to do? That will be taken over the period of condition which we have to satisfy. Clear or not clear? That's why when you read the bare standard, what they will write is any government grant which we are receiving from non-depreciable asset should be taken to P&L on systematic and rational basis in the systematic and over the period in which we are satisfying the conditions. It can be years, it can be expense also. It can be years, it can be sometimes both will be there. Then we have to take expense ratio. Then we have to take what ratio? That is very easy. If government says, first 5 years don't build anything, don't build something, clearer, then simple. 30 lakhs divided by what? 5 years. 30 lakh divided by 3 years, whatever years. That is simple. That is what? Then entries we know. What is the entry to transfer from DGG to GG? DGG to GG. Next entry is what? GG account debit to debit or debtor. GG account debit to P&L. Assume they are telling 5 years. They are telling how many years? Then 30 lakh divided by 5 years. Each year how much? 6 lakh. Then every year I will be taking what? 6 lakhs. That is easy. Papas also will do that. Clear? We are learning CA. They will not do such things. Clear? They will give some expense ratio. Clear? Assume. What is the expense ratio? We'll see. This particular point I will start teaching now. First year. Which method we will follow? Adjust with the cost. Generally they will not follow that. What they will follow? Show it as a separate income. Show it as what? Separate income. Point number 1. Listen to me, ma. What is the first year day 1 entry on the purchase of land? Land account debit to bank account. On receipt of government grant. What is the journal entry? Bank account debit to how much, ma? Correcta? After passing this, if you see balance sheet, after passing this to DGG balance will be 30 lakhs. The 30 lakhs is first year, all the 3 years. All the 3 years. Correct. Land is touched, untouched in this entry. This DGG should be taken to P&L of first year or all the 3 years. Equally or in the ratio of expense in this case. Super. Then we have to do. So at the end of year number 1, we know we will not pass depreciation entry for this. Why we will not pass depreciation? For this itself we are passing depreciation. Jump from here. Clear? Reverse you have to jump. Then only you will go quickly. Clear? Alright, tell me. Depreciation entry will be there, will not be there. One entry will be there. What is that? Transfer entry from DGG to GG. Entry and all we know. What we know? Entry we know. Now we have to know from this 30 lakh how much we have to take it to P&L. It depends upon the expense we have to incur to satisfy the condition. To satisfy the year number 1, what is the actual expense? Correct. So this is actual. From year number 1, okay, from year number 1, we need to know year 2 and year 3. Actuals will get or estimates will get. So year 1 we spend 20 lakhs and we are estimating that year 2 it will be 30 lakhs, not cumulative, individual years. Clear? So year 1 I spent how much? 20. Year 2, year 3 I'm thinking that I will be spending how much? 30 and 50. So total expenditure how much I'm going to incur? Now listen. There is an amount of 30 lakhs in DGG. Repeat once again. There is an amount of how much? 30 lakh in DGG. Out of 30 lakhs, we are in which year? Year number 1. In year number 1, how much you are spending? Out of how much? Means how much percentage you spent in first year? 20%. How much percent? 20%. Say yes or no. Correct? Then they are telling in P&L if you take expense, how much? 20 lakhs, which represent what percent? Then GG also what? 100% or 20%? That's it. How much is the DGG? 30. 30 into 20 divided by 100, which is 20 by 100, which represent what only? So how much it is? 6 lakhs and 6 lakhs. Correct? Yes or no? For this expense, we have to pass the entry or we should not pass the entry? We have to pass the entry. For depreciation only, no entry. Expense for that, we have entry or we don't have entry. We have entry. Actual expense is 20 lakhs. Therefore, expense to bank, expense should be closed and taken to P&L. Then if you see P&L, expenses how much? Which represents 20%. DGG how much? 6 lakhs. How much? 6 lakhs. Therefore, in balance sheet, land remains untouched. Sir, depreciation we have to provide, no? Okay. Then DGG beginning. What is the transfer? Amount is 6 lakh. What is the balance? Correct. Slowly every year it will go. Correct. Second year we will see. Hello. Second year. In the beginning of second year, land was 150. Last year, how much we saw? Balance is 24 lakhs. Now, we know that we are going to pass expense entry as well as transfer entry. Amount is required. Correct. What is required? We are in what year? Year number 2. We are in which year? In year number 1, what is the actual amount? How much we estimated? Assume same number is there. But it will change, it will not change. It will change. Correct. If it changes, what to be done? I will tell you. Listen. Assume what you estimated has become actual. What you estimated has become what? Estimate remains to be estimate for third year. Clear? Now my question is, actual amount for first year. Actual amount for second year. We are in which year? For third year, we will estimate actuals. Estimate. Same estimate we are having because for second year, what we estimated has become actual. No, with super confidence, you are having the same estimate. You are not changing. You are not changing. So, what is total expense? 20 plus 30 plus 50. Total. Therefore, how much we have to take is, correct? Total DGG was how much? In the 30 lakhs, how much you are spending in second year? Out of how much? Therefore, 30 divided by 100. Clear? What is specifically is, what is important is, don't do like this. Even though for this question it is correct, but not always. Small changes we have to make. For that, what we can do, no? In the beginning of second year, what is the DGG value? This is for first year or second and third year? Now they are telling, instead of taking totals, what you do, what is the balance? 24 lakhs, which represents what and what? Then they are telling, if you take year 2 and 3, take the total of what? Year 2 and 3. Point number 1. See, when I have taken the balance 24 lakhs, how many years are pending? Second and third year. What is the second and third year amount? 30 and 50. Total comes to 80. In the 80, we are spending how much? Then they are telling, use like that. So, in the year 2, year 3, if I have taken year 2 and year 3, denominator should also be what? Year 2, year 3. In that year 2, how much I am spending? Same answer only you will get. Clear or not clear? What is suggested, sir? Whole or remaining is better? Remaining is always better. Same we will be learning in many standards. Say for example, AS7 I will be teaching this. Where I will be teaching this? AS7. Clear? Therefore, always what is pending? What is the pending number of years total? In that, what is the amount we are spending? Clear? If here we are taking 1, 2, 3, here also it should be 1, 2, 3. Clear? Therefore, we are getting how much? 9 lakhs. So, 9 lakhs is the amount transferred. 9 lakhs is the how much expenditure, actual expenditure for year number 2? 30 lakhs. So, that I am passing. Clear or not clear, Amma? Everyone? Third year. What is that? Third year. So, listen. After passing these entries, in P&L, how much we are spending in year number 2? 30 lakhs. How much we are transferring to P&L? 9 lakhs. From DGG to P&L? 9 lakhs. So, 24, 9 went to, what is the balance? Correct. Land always remains same. Correct. Coming to third year, before I start the third year, what is the balances we are having? 15 and 150. Come on, 15 and 150. We are in which year now? Last year. Okay, what is the estimate we made previously? 50. Assume actual is also 50, but always possible or it can change? It can change. Assume expenses 50. I am passing entry for 50. I am passing entry for what? 50. Clear, Amma? Hello? Then what I am doing is next DGG to GG. Correct? What is the, I told you, no, balance approach. What is the balance? Come on, what is the balance? 15. Correct? How much you are spending? 50. How much you spent? 50. Not required. Slightly you can do it. Clear? But so even though you do, you will get what? 15 lakhs only as answer. Clear? 15 lakhs. So in P&L, 50. Whatever is the balance you are taking, DGG will show balance or nil. Land will be 150 lakhs. Sir, for example, assume it is changing. Correct? Scenario 2, year number 2. Correct? Listen, year 1, how much we spent actually? 20 lakhs. How much we estimated for year 2? Always it will be same, or in reality, in practical life, things will change. Now, actual, assume it came to 40. We will pass expense entry for what? Actual. What is the entry? Expense to bank, P&L to expense. We always pass entry for estimate, actual. Actual. Correct? Now tell me, amount to be transferred to DGG to GG, from there to P&L, depends. Correct? What is the balance we are having? Which is first year, 2 and 3. Now how to do the calculation? 24 lakhs is the balance, which is representing which years? 2 and 3. Then denominator also will take it for what? 2 and 3. If I take this for year 2 and 3, if I write denominator 1, 2, 3, joke will be there. Your life will become a joke. Correct? Yes or no? Okay, so what is the year 2 and year 3? 40, and estimate is you are changing how much? 70. All the changes in accounting estimate should be accounted prospectively. This is an estimate changed. Estimate changed should be accounted what? Prospectively. Changes in accounting estimate is always on what basis? Prospective or retrospective. So from now onwards you have to change. So what is that? 40 and 70. Total comes to 110. Total comes to, in that how much I am spending in year 2? 40. So what percentage? 36.36. You are not required to do that. Straightly you will get the value. How much you will be getting? 8.73. 8.73. Therefore, expenses how much you incurred? 40 lakhs. What is the pending percentage? 36.36 for the year number 2. And GG also should be recognized in the balance. 36.36. 36. This concept is called as dash concept. In balance sheet starting 24 we are having, then we transferred how much? 8.73, and land will remain same. What about this 15.27? it will be taken to the subsequent year. It will be taken to the subsequent. That cycle will be going. If it is not satisfied in the second year, if government extends and one more year will be extended. In class, I would have thought for expenses. Same will be going. Clear agana? Yes or no? With this, what is completed? Non-depreciable asset is completed. Clear or not clear, everyone? Hello. So, when it comes to government grants, when it comes to what? Government grants relating to what? Specific fixed assets. What is that? Specific? It can be depreciable or non-depreciable. It can be depreciable or what? Non-depreciable. Correct? Since we have learned this, we will also learn what? Refund of depreciable asset. We will learn what also? Refund. Or we will see when, correct? What we will understand? Refund of government grant. Small one. Who is the small category? Non-monetary asset. What is the small category? Non-monetary asset. What is the meaning of non-monetary assets? Right? Instead of giving cash, see in previous questions and all, government would have given amount. Here, government will be giving the amount or other than amount, other than cash. Clear? They are called as non-monetary. It can be in the form of land or any other resources. Any other? So assume, for example, government grants land for construction of school whose market value is 10 crores. Whose market value is? Now, government can give this land either free of cost or at concessional rate. Either free of cost or, for example, say government is telling, array market value is 10 crores. Since you are doing something good, what I will do, you give me how much? 3 crores. Therefore, there is a benefit of how much? 7 crores. That benefit is termed to be what? Government grant. Tell me, government grant. Clear or not clear? Listen, what is the guarantee they are telling? Bare standard says that whenever you get a land, or what? Concessional rate. Here you are sacrificing 10 crores or 3 crores. Land is what? Property, plant and equipment. Should be recognized at what? Cost. In this question, what is the cost you are sacrificing? Then recognize at what? 3 crores. Which is at what? Concessional rate. Which is at what rate? Then government did not get even 1 rupee, sir. Freely they are giving. What they are giving? Freely they are giving. Then what happens? Land will be debited. What will be debited? Corresponding credit shall I write bank? What I should write then? Why capital is because there is no condition to be satisfied. Correct? There is no condition to be satisfied or no other condition. They are just giving for free of cost. Correct? But what value will write? Nominal value means what? Very negligible or immaterial or very small amount that is not impacting the decision of the users. It is immaterial amount. It should be what? So it can start with what? 1 rupee, 10, 100,000. Make sure it is immaterial. Make sure it is. But question is relating to this non-monetary asset which we are receiving for free of cost. Correct? Bare standard said one thing. I showed you that day also. Correct? It should be recognized at nominal value. They did not talk about what aspect? Credit aspect of the journal entry. Yes or no? Since bare standard is silent. Since what is silent? The corresponding credit can be taken to capitalism or even it can be taken to P&L. Even it can be taken to, because small amount, no, what difference will be there? It will not impact the decision of the user. Since standard is silent, we can take it to any account. We can take it to what account? Any account. So land account debit to capitalism, it should be recognized at what? Nominal value. It should be recognized at what? Nominal value. Will you remember this also? Clear or not clear? Next we will be going to what? Refund of government grant. Next we are going to what? Refund of government grant. Clear or not clear? Everybody, hello? Everyone understood up to this? Ready, Amma? Refund of government grant. What is that? Refund of government grant. When we have to refund the government grant, whatever we have received, when we superseded government's condition or not at all doing that, or doing but you are violating, correct? So then that time we have to refund. Okay, one sum I will teach. With that we will understand all other refunds. Clear? Point number 1. Read this question. Renewagen Energy Limited purchased what? Plant and machinery for 50 lakhs whose useful life is 5 years. You all have calculators with you. Okay, it is a grant of how much? 20 lakhs from state government against what? Plant and machinery. Against what? Means it is what? Depreciable asset. Against the depreciable asset we are giving. In the beginning of the second year, grant becomes refundable due to non-compliance of certain condition. Means in the beginning of which year itself? In questions in exam, they'll ask in the beginning of third year or fourth year or third year end, see the beginning or end. That is what is important. Pass the journal entries and prepare financial statement extracts. If this amount of what grant, how much is that? 20 lakhs. If it is adjusted with the cost of the asset, what is the journal entry? If it is adjusted with the, it is treated as deferred income, what is the journal entry? I am telling you, after seeing this now, you will crack all the questions in ICA study material, past exam question. That confidence you will have. I am telling you, bare standard itself, you will rock it. Clear? So make sure you are watching everything clearly. That is what I am telling you. Clear? Listen. Government grant first. If it is adjusted with the cost of the asset. Point number 1, year number 1, correct. On purchase of plant and machinery, what is the journal entry? To bank. Correct. Next, on receipt of government grant, what we are doing? Adjusting. What is the journal entry? Bank account debit to plant and machinery. Now, after passing this entry, in balance sheet, plant and machinery will appear at what value? 30 lakhs. What lakhs, And useful life, as we saw in the question, it is 5 years. So, 30 lakhs, scrap value 0. If it is 0, you subtract. How much it is? Every year, 6 lakhs. So, in P&L, 6 lakhs. In balance sheet, initially it is 50. Government grant, we have adjusted. So, net carrying amount is how much? 30. Depreciation, carrying amount. In the second year end, we are doing overaction, or beginning itself we did overaction, he sent a love letter. Correct? So we are going to refund. So in the beginning of second year, we are going to refund the government grant. Correct? Actually, the due entry will be, what we are going to do is, first, refund entry depends upon what you did at the time of receipt. At the time of receipt, what we did, we have adjusted with the plant and machinery, you reduced it. Correct? Since you are adjusting the cost, refund also what we have to do, we have to adjust with the, when I say adjust, always minus, always add, it can be anything, Since you pass this entry, correct, since we reduce plant and machinery, on refund we have to increase the plant and machinery. To increase plant and machinery, what we have to do, debit and increase or credit? Debit plant and machinery, and when you refund, bank balance will reduce. So what is the journal entry? Plant and machinery account debit to bank account. Yes or no? Correct. Because of this, already at the beginning of the second year, we were having 24 lakhs. With that, what is added? 20 lakhs. Correct. Yes or no? Therefore, what is the revised carrying amount of plant and machinery after refund? Next, second year end onwards, if you have to provide depreciation, whether depreciation is on 24 lakhs or 44 lakhs. Retrospective, or you will go back and start depreciation once again, or prospective is fine. Who said this? AS10, when it is read with what? AS5. Changes in accounting estimate should be what? Accounted prospectively. Even any changes in the carrying amount should be accounted what? Prospectively. So, at the end of year number 2, now the revised carrying amount is what? 44 lakhs. Again, scrap value 0. Scrap value is what? Sometimes they'll say at the end of second year, we have got a scrap value. So subtract that and get the value of depreciation. Clear? So how much? 11 lakhs. So every year, how much is the depreciation? 11 lakhs. Therefore, in P&L, how much is the depreciation? Refund of government grant. Tell me what is that? Refund of government grant. How much we are refunding? 20 lakhs. Refund of government grant is dash item. Ordinary or extraordinary item? Extraordinary means in normal language that extraordinary, or P&L separate line item extraordinary. Separate line item extraordinary. Refund of government grant is extraordinary item. Who said this? AS12 said or AS5 said? AS5. AS5 is the person who tells what is an ordinary activity, net profit or loss for the period, prior period items. Clear or not clear? I thought you know AS5 that time. Correct, prior period items and changes in what? Accounting policies, everything it will talk. Clear? So they are telling refund of government grant. Tell me what is that? Refund of government grant is an extraordinary item. Is what item? Extraordinary item as per what? AS5. As per what? AS5. Clear? Therefore, once we refund, correct? What was the amount we saw? 44. In that, what is the revised depreciation? 11. So, what is the revised carrying amount? 33 lakhs. Clear or not clear? Next year also 11 lakhs we will charge depreciation. Hello? This is which method? If grant is adjusted with the cost of the asset, this is the refund entry. What is method number 2? Where grant will be treated as deferred income. Year number 1, beginning of year number 1, when we purchase, what is the entry? Plant and machinery to bank. When we receive, DGG account. At the end of what? First year. At the end of what year? First year, we will transfer some amount from DGG to DG, from there to P&L. Correct? What is the DGG value? 20 lakhs. What is the DGG value? Correct? So my question is, did we touch the plant and machinery Or we did not touch? We did not touch. Correct? Therefore, what will be the depreciation every year? 50 lakh minus 0 divided by 5 years. Every year, how much is the depreciation? Assume this is SLM because no other information is given using useful life. So every year it will be what? 10 lakhs, 10 lakhs, 10 lakhs. Then ratio will become what? 1:1:1. What is that? Therefore, in from balance sheet to P&L, 20 lakhs, total depreciation will be in that 10 lakhs. Correct? So how much? 4 lakhs and 4 lakhs. Depreciation is also what? 10 lakhs and 10 lakhs. Clear? So in P&L, how much we'll have? 4 lakhs. Depreciation how much? 10 lakhs. Balance sheet from J'27 first year you send 4. Balance will be 16 lakhs. And the carrying amount after depreciation is 40 lakhs. This is at the end of first year. Second year starting refund takes place or end? Whether you will charge depreciation not required for the second year. When we have to charge depreciation for the second year? When it is at the end. When it is at the end. So refund of government grant happens at the beginning of the year. Tell me, after refund, how much you are refunding? Whatever you receive, you have to refund. Clear? If they specifically tell that any number, that number you have to write. Clear? Assume they did not tell anything. Entire 20 lakhs we are refunding. So bank balance will decrease by? Tell me, decrease by? Actually, in reality, what entry they will pass is repayable entry. Government grant refundable. What they will credit? Then once they repay, what they'll do? Government grant refundable to bank. That and this gets cancelled. Clear? You're able to understand that? Listen. So once I return, 20 lakhs will decrease. What will decrease? 20 lakhs. After repayment, still it is a liability, no more a liability. Since it is no more a liability, what you will do? You will tear the paper. Correct? Or sir, in articleship, it will be there in laptop, sir. I will just take a hammer and I'll destroy the laptop. Or that. What we have to do? In accountancy, nothing comes automatically. So this liability I have to reverse. Liabilities will have what balance? To reverse, what I should do? So DGG should be reversed because it is no more our liability. 16 lakh 20. There is a difference of which should be taken to? Why sir P&L is debited? Because first year where you have taken P&L credit. So that's you have to that is what you have to adjust it. Clear? So what is the refund entry? DGG account debit, P&L account debit to array. After passing this entry, whether DGG will show any balance? Nil. Asset will continue at what? 40 lakhs only. So at the end of the second year, depreciation account debit to plant and machinery, whatever is the value divided by 4 years, means balance how many years? Or you can take, since it is SLM, that also you can do. How much it will be? 10 lakhs. So 10 lakhs and 10 lakhs. So P&L will be debited by 10 lakhs. Refund of government grant will be there. How much? 20 lakhs, which is an extraordinary item. Therefore, balance sheet at the end of the second year, DGG, that day itself gone. Correct? Beginning itself gone. Then plant and machinery balance will be how much? 40 minus 30. That is 10 becomes what? 30 lakhs. With this, what is done? DGG is done. I'll ask you some questions. Listen. Whenever we are refunding, whenever we refund, simple it depends upon what method. It depends upon, if it is first method, on receipt, what was the journal entry? Bank to plant and machinery. Correct? Bank to asset. When you refund, what you do? Asset to bank. Increase the asset. Provide higher depreciation. Provide what? Higher depreciation. Sir, no sir, I have taken to DGG. I have taken it to. Correct? Then what is the entry for refund? First pay. Correct? First what? Pay. Okay. If question says it is still repayable, then you will write GG repayable or refundable. Clear? And once you pay, whatever is the balance in DGG, balance should be reversed. Difference should be taken to P&L. Repeat. Bank should be credited with amount of refund. Repeat once again, ma. Bank should be credited with amount of refund. Whatever is the balance in DGG, you write it, and difference should be taken to P&L because that is what we would have earned, recognized as income in P&L. Clear? So repeat, DGG should be debited with balance of DGG. Repeat, balance of DGG. Bank should be credited with amount we paid, and difference should be taken to P&L. Difference should be taken to what handle? P&L. Therefore, refund of government grant. What is it? If it is depreciable asset. If it is what asset? Depreciable asset. On receipt of government grant, what was the journal entry we were passing? Bank account debit to asset account. On refund, what entry will do? asset to bank. Sir, I have not adjusted, sir. I have shown it as what? Deferred income. Then on receipt, what entry would have passed? Bank account debit to DGG. Every year end, what used to pass? DGG to GG. That GG will be taken to P&L. Correct? Sir, I am refunding, sir. Then what is the journal entry? DGG account debit, P&L account debit to bank. Always with the amount refund. This with the balance in DGG, and difference should be taken to P&L. Difference should be taken to refund of government grant is treated as what item? Extraordinary item. Yes or no? Clear? Sir, for depreciable asset you said this. Shall we complete for all the assets now? Listen, non-depreciable asset. For non-depreciable asset, what we have seen, whether it is with condition or without condition. First we will complete what? Without condition. If you are receiving a non-depreciable asset, when you are receiving what? Non-depreciable asset, land. Correct? Non-depreciable asset what? This is non-depreciable asset. This is what? Non-depreciable asset. Okay. You are receiving non-depreciable asset related grant. Correct? Yes or no? At the time of receipt, what you would have passed? Bank account debit to capital is without conditions. Correct? When you refund, what is the journal entry? Capital is out to bank. Sir, I am having what, sir? I purchased land. Against the land, who is giving the grant? Government is giving the grant. Correct? Correct? With the condition, sir. See, now thing is, government will give 1 year condition or more than 1 year condition. What we did is more than 1 year. Sometimes they will tell, they'll say only 1 year. So, non-depreciable asset, land, against that government is giving grant. Clear? And condition is only 1 year. On receipt, what is the journal entry? Bank to DGG are not required at DGG. Why not required DGG? Because it is 1 year only, no. DGG should come into picture when it is more than 1 year. Deferring should happen that time only. Correct? So, slightly you would have written what? Bank account debit to GG, that is P&L. Within, after getting the grant, within 4 months you have violated. Then we have to refund. Then what is the journal entry? Same, P&L account debit to bank account. P&L account debit to, sir, I have received against land, I have received grant, sir. Against land, I have received what? Grant. But condition is beyond 1 year. Condition is what? Like botanical garden, public parks, 3 years we have to do. Correct? Then who will come into picture? DGG will come into picture. So on receipt, what is the journal entry? Bank account debit to DGG account. Repeat once again. Every year we will pass one entry. What is that? DGG account debit to GG account. Yes or no? What is that? Correct? And on refund, what we will do? Since there is DGG, who will come into arena? DGG account debit, P&L account debit to bank account, same story. So whenever you see DG, the entry will be same. Just you have to see the balance, you have to reverse it. Clear? Sir, one more thing also you thought, no, non-monetary asset, sir. What is that? Concessional rate free of cost. When I purchase an asset at concessional rate, what is the journal entry I was passing? Asset account debit to bank account. Asset account debit to, on refund, what is the entry will pass? Bank account debit to asset. Means you are giving away asset and getting the amount back. Sometimes what happens is government will ask, you remember 10 crores they are giving for 3 crores. Government, instead of getting the asset back, they will say pay the 7 crores extra. Pay what extra? Then that time what entry will pass? Asset account debit to bank account, increase the asset by 7 crores because we are sacrificing. Because what? We are clear, free of cost. At free of cost, what was the journal entry? Asset account debit to, when I refund also, same, whatever I am crediting, I have to reverse it. Clear? With this, what is completed? Asset related government grant is completed. Clear? Next comes what? Government grant related to revenue. Government grant related to, you remember, government grant related to revenue means it can be income based as well as what? Expense based. Income based means what? Assume you are having an export company. If you export to USA and you are bringing into India, say $1 lakh, for that government will give you what? Export incentive. For every dollar, government will give 2 rupees, 3 rupees, 5 rupees. Correct? That is also what? Government grant only. That is also what? For generating income, you are getting what? Government grant. So that is called as revenue grant. That too, what revenue? Income. What is that? Revenue means not revenue from operation. Revenue items. What is that? Revenue items means income or expense. Revenue means not sales. Revenue items here. What is that? Revenue items. That is income based grant, expense based grant. In that, what we are going to do? Income based grant. Ready, Kana? Few more minutes, we'll finish it off. Come on. Government grants relating to income. Government grants relating to income. Clear? Government grants relating to, no. Now it is fine. Ready, ma? Listen. That AC is not on. Listen, ma. Government grants related to income. Read the question. Apex Exporters Limited exports goods to USA. Government of India grants an export incentive for $1 for every dollar they are giving how much? 3 rupees of exports proceeds released. During the year 25-26, company released exports proceeds for how many dollars? For $1, government is giving 3 rupees. How much we realized? $1 lakh. Condition satisfied. So therefore, how much amount we have to receive? 3 lakh rupees. How 3 lakh? 1 lakh divided by 3. Correct? How much? 1 lakh into 3. So 3 lakhs. Correct? Simple entries. Due entry and receipt entry. What is the due entry? Government grant receivable account debit to government grant. When you receive, what is the journal entry? Bank account debit to 3 lakhs and 3 lakh. Clear or not clear? Hello. Therefore, what is the net entry? Bank account debit to government grant which is taken to P&L. Which is taken to, assume you have exported some illegal goods which government is finding later. Correct? Then what is that? Refund entry. First they will take you to jail. That proceedings will be there. First just tell me what is the refund entry? When you got, what is the entry? Bank account debit to government grant, that is P&L. When you refund, what is the result entry? P&L account debit to bank account. Clear or not clear? Hello. Now next to what? Government grants relating to expenses. Same like what? Depreciable asset. Same like what? Depreciable asset. Very, very easy. Clear? See, government grant related to expense. For example, I'm having one company. I'm having what? And I'm spending what see in the year 2000, like COVID time, 2000, COVID-19 is there, 19, 20, 2021. What happened? Certain companies, they were spending some amount to make sure their employees are getting vaccinated, COVID vaccination. For that, they would have spent. There are certain companies which it has done like that, for which government has given grant. For which, who has given grant? Whatever amount they spent, for that, assume they are getting the amount back. So amount spent, expenses incurred, for which government is giving the grant. Expense based grant. What is that? Sometimes what happens? I'll train my employees. Training cost will be incurred. What will be incurred? So that they will know the technical skills, like computer skills, every skills they'll know. Who is happy? Government is happy. Who is happy? Government is happy. Government will give grant for the expenses incurred. They are called as what? Expense based grant. They are called as what grant? Government will giving amount, they'll say 1 year you train or more than 1 year you train. So condition will be 1 year or more than 1 year. Repeat once again. Conditions can be less than 1 year or 1 year or more than 1 year. Chips packed for us. We'll finish it off. Clear? Listen, read the question. Hero Auto Parts Limited undertook 1 year employee training program. Assume we are the company. Every year we are taking that employee training. How much we are spending in a year? Government sanctioned. Come on, what is that? Government sanctioned a grant of rupees how much? 10 lakhs towards such expense with a condition that company complete the training, complete the 1 year training program. Means this 10 lakh is relating to what? 1 year only. DGG required or not required? But this also two ways of accounting. Clear? One, that 10 lakh will be adjusted with the expense, or this will be shown as expense, this will be shown as income. Tell me what are the two alternatives? Like depreciable asset. Adjust this with the cost, means employee benefit cost, or show it as income, show it as expense separately. Clear? Finish. Let us finish. What is the first one? Government grant adjusted with the expense. First, how much expense you are spending? What is the journal entry? Training expense account debit to bank. Next, you are receiving grant. Bank account debit to adjusting, no. What? Asset name will write. Alright, this is expense. What you have to write? Bank account debit to training expense. First question. How much you are spending? How much you are getting back? In net, what is the training expense? That only we have to transfer it to P&L. What is the journal entry? Wrong. What is that? Come on. What is the journal entry? P&L account debit. Repeat it, ma. P&L account debit to training expense. Repeat once again. P&L account debit to training expense. How much only we are? 40 lakhs and 40 lakhs. Correct. So in P&L, what happens? Training expense will be debited with net amount. Will be debited with what? By decreased expense, what will increase? Profit is increased. Therefore, government grant is accounted indirectly. Government grant is accounted what? This is one way, or other way is what? To show it separately. First, how much you are incurring? Training expense. Correct. This you close and take it to P&L. Correct. Therefore, in P&L, what is the training expense amount? 50 lakh. Now you are receiving what? Government grant. Condition 1 year, more than 1 year. DGG is required, not required, not required. Therefore, what is the journal entry? Bank account debit to GG. GG is closed and taken to P&L of that year. Entire amount is taken. Correct. Therefore, P&L, how much? 10 lakh. What is the net amount? Here also, what is the net amount? So both the alternatives are what alternatives? Correct alternatives only. Clear? Listen, ma. Sir, if a condition is more than 1 year, condition is more than 1 year. Read the question, everyone. Hero Auto Parts Limited undertook a 1-year employee training program. How much every year we are spending? Government sanctioned a grant of how much? 20 lakhs towards such expenses to complete how many years, Ra? Repeat, to complete how many years? Now condition is 1 year, more than 2 year, more than 1 year, more than 2. Then who will come into arena? So method number 1. What is method number 1? GG adjusted with the expense. Method number 2, show it as an income. Say, easy only. What is the expense every year we are spending? 50 lakhs. Correct? What we are receiving? Government grant. How much we are receiving? 1 year or 2 year? That's why who is coming into arena? DGG. Correct? So in balance sheet, who will appear? DGG will appear in the liability side. Correct? Presentation, where we will show the DGG, sir? If it is non-corporate. If it is what? Non-corporate, other than companies, they will show after what? Equity, before non-current liability. Tell me, after equity, before? If it is corporates, no. If it is corporates, they will write DGG. They will write what? DGG. Within 1 year, how much you are going to transfer? Say 10 lakhs. That will be shown as current liability. After 1 year, how much you are going to transfer? Balance. That will be shown as non-current liabilities. Presentations. They are what? Presentation. Listen. First, on receipt, what is the journal entry? Bank account debit to DGG, 20 lakhs and 20 lakhs. At the end of first year, this DGG amount should be transferred to what? P&L. But in this, what we are doing? We are adjusting with what? If it is shown as separate income, what is the entry? DGG to GG. Correct? If it is shown as separate income, what is the entry? Same answer, sir. Expense, bank to DGG. If I want to show it as separate income, what we used to do? DGG to GG. Correct? Next is what? This is training expense. This one second, I'll change it. Okay, tell me the entry. GG to P&L. Come on, GG to P&L. How much I'll do? 10 lakhs and 10 lakhs. This is general. If it is shown as separate income, we know this is the entry. We know this is the entry. Therefore, what happens? P&L we will show 50. GG how much? Transfer to P&L is 10 lakhs. DGG balances, which will be taken to second year. Which will be taken to. But in the first method, are we taking it to separate income to P&L or we are adjusting? Then DGG to GG is the right answer, or DGG to adjust it with the training expense. So total DGG 20 lakhs. What is the total training expenses for year 1 and 2? 100. In that year 1, I am spending how much? Same like that non-depreciable conditions are there, in the ratio of expenses. Tell me in the ratio of expenses in which we are we are incurring to satisfy the condition. Same like that only. Whatever is expenditure in that ratio only. Whatever is expenditure, what is the total expenditure for year 1 and 2? 50 and 50, 100. In that year 1 means 20 into 50 by 100 is what? 50%, that is 10 lakhs. Clear or not clear? So what is the entry if it is adjusted with the training expense? DGG to GG. When we will pass DGG to GG? If it is shown as separate income. If it is this method, DGG to adjust it with the training expense. Therefore, listen to me, ma. How much is the training expense you are incurring? Out of which, how much you are adjusting? Where is that? Sorry. How much you are spending for training expense? How much you are adjusting? Net training cost, how much? That only is closed and taken to P&L. Therefore, in P&L, if first method is follow, how much? 40 lakhs. Balance sheet, balance 10 lakhs. Correct? In second method, 50 and 10 shown separately, balance is 10 lakhs. At the end of second year, what is the second year? Whatever is the actual expense, whatever is the, what I am taking as 50 lakhs only. But always 50 lakhs, it can be different. It can be different. So, training expense to bank. Training expense to, then the DGG is closed and taken to training expense. Correct? Yes or no? If it is second method, what is the journal entry for the second one? DGG to GG, which is closed and taken to, clear or not clear? How much you are spending? How much you are adjusting? Net is, that is closed and taken to. So second year, P&L 40. DGG will not show any balance. If this is the method, training is shown separately, government grant shown separately, DG is water, DGG is nil. Clear? Sir, if this is the case, we will see what also? Refund also. We will see what also? 360 degrees. What is that? You will not miss out on anything. I am telling you, no. It is like, one shot solution. I am telling you with so super confidence. Because how many times I would have thought, how many times I would have saw that standard, how many questions I would have seen. Listen, revenue based grant. Come on, income based grant, expense based grant. Repeat once again, income based grant, Income based grant, you remember? Due and receipt entry. Net entry is bank to GG P&L. When I refund, reverse the entry. Clear? Sir, expense based grant, sir. First method. What is the first method? Government grant adjusted with the expense. Condition can be less than 1 year, more than 1 year. Less than 1 year means what I would have done if I am adjusting bank to training expense. Bank to which is closed and taken to P&L. If I refund, what I should do? P&L to bank. Clear, ama? Sir, more than 1 year means who will come into arena? Who will come into arena? If refund is there, DGG account debit, training expense which is closed and taken to P&L to bank. Clear? Sir, I am showing it as a separate income, sir. Then what is the first entry if it is 1 year? Bank account debit to GG P&L. Correct? If I am refunding, P&L to bank. Sir, I am showing a separate income, sir. Then who will come into picture? DGG. What is the transfer entry? DGG to. When I am refund, what is the journal entry? DGG account debit, P&L account debit. Clear or not clear? Everyone, hello. Last one, promoters contribution. What contribution? Means you have done something. Clear, for which government is giving as an amount. You would have invested so much investment. I am giving as a part of that. Or out of total capital outlay, let this amount be my part of contribution. Generally, for this type of grants, what will not be expected? Like, repayment will not be expected. What will not be expected? Generally, what will not be expected? Repayment will not be expected. Therefore, it is treated like what profit? Capital profit should be taken to what reserve? Capital reserve. Should be taken to what reserve? Capital reserve. Since you are taking it to capital reserve, dividend should be distributed or not distributed? There is one question where what these people will do once they receive this amount. No, they will out, for example, 50 lakhs they are receiving. Out of 15, 8 lakhs they will distribute for what? Dividends. Question is whether this is right or wrong. Karate will write right. Correct? Right or wrong? What reserves only are eligible to be distributed? Free reserves. What reserves? Capital reserve is free reserve, not a free reserve. Not a free reserve. Clear? Therefore, whenever it is, sir, how to identify? See, there will be one confusion. How to identify this question is, see, they'll tell, like, government has given this amount for what? Plant and machinery, which you, which you installed, which was there in what? Backward or notified areas. You remember? When you see the word backward or what? Notified areas. That's why in that question I actually purposefully I have erased that. Correct? When you see backward or notified area, don't even think it is asset related grant, method 1, method 2. No. Straightly what? Promoters contribution, take it to capital. If the moment you see backward or notified, straightly it is what only? Because the intention of the examiner who is framing the question is they want if you are starting in notified, for motivation only I will give you the amount. Generally I will not expect the refund. Clear? Generally no repayment will be asked unless you do some violation. Clear? So whenever you see in the question, what is that? Backward, notified, even they will give against the purchase of plant and machinery which you are installing in notified backward area. Then you don't think asset related grant, method 1, method 2. Don't do. Straightly write it as what? Promoters contribution. Take it to capital reserve. Therefore, what is the entry? Bank account debit to capital reserve. Refund means what? Capital reserve to bank account. Capital reserve to what account? Clear or not clear? See, now certain standards I will interlink. Clear? AS12 and AS1. What is that? AS12 and in the beginning of the standard itself, I was telling you, accounting for government grant, income recognition of grant should be on receipt basis or accrual basis. Accounting on receipt basis is violation or not a violation? Violation as per which standard? So they are telling income should be based on accrual basis. Accounting on receipt basis is not in accordance with what? AS1. Not in accordance with what? Next, AS12 and AS3. What is that? AS12 and assume I am purchasing plant and machinery 50 lakhs. Clear? Against which I am receiving government grant of what? 20 lakhs. What cash flow statement says is, whatever method you follow as per AS11 or passing journal entry, method 1 or method 2, you follow whatever you want to follow. But when it comes to cash flow statement, you have to show purchase of plant and machinery 50 lakhs separately as outflow. Government grant refund separately as inflow. Separately you have to show. You should not show on what basis? Net basis. You should not show on what basis? It should be shown separately. It should be disclosed what? Separately. Netting allowed, not allowed. But when you are passing journal entry, you can also do what? Netting. Adjust with the cost. Whether you follow method 1 or method 2. Tell me whether you follow what? Whether you follow method 1 or method 2, I am not bothered about what your P&L and balance sheet. I am cash flow statement. Cash flow statement should be done as per AS3, not as per AS12. AS3 says since there will be major cash movements. What movements? Since the cash flows, this will cause major cash movements. They are telling show it separately. Don't net it off. Don't what? Net it off. Clear? We have to show separately only. I'll ask you certain question. In cash flow statement, how many activities will be there? 3 activities will be there. What are the 3 activities? Operating activity, investing, financing. Generally, asset related and all, it will be taken to what activities? Investing activity. What activity? Revenue based grants can go to what? Operating activities. Promoters contribution will go to super. Their refunds also will be accounted as per that activity only. Clear? If one mother is accounted in that activity, refunds also will be accounted as per that activity only. Clear or not clear? Hello, that's what they would have said here. AS12 and AS4. What is that? AS12 and any country. I passed one entry for government grant. After passing, after 31st March, 31st March night to 12 o'clock itself, these people will prepare financial statement. Practically not possible. Generally, what happens is 31st March we will financial year will end. Then we will go first. They will prepare the books. They will finalize. We will audit. Then we will finalize. So there will be one time period. Between the time period before financials are approved, before what is approved, whatever certain items we can adjust in the balance sheet, means in the financial statement, certain items we cannot adjust in the financial statement. We can do it in the next year only. We can do it in the, that is called as adjusting and non-adjusting. Repeat once again, adjusting and, that is as per AS4. That is as per, they are telling, array, after a contingency related to government grant. Read once again, contingency related to arising after the grant has been recognized. Arising after the, should be accounted as per AS12, as per AS4, as per AS4, not as per AS12. Clear? Next, already I told you, AS12 and AS5, extraordinary item. There are 3 extraordinary items that are covered in what? AS12, which is said in what also? AS5 also. One is already known. What is that? Refund of government grant. One is what? Second and third, I'll tell you. What is that? Second and third, I'll tell you. For example, assume you are Tata. Assume Tata is going what? Big, like, so huge financial crunch. Government of India was like, array, you did so much to the country. Clear? At this time, I will help you. Don't worry. Like that, immediately they are giving financial support only to Tata. Only to, not to any other entity. Then that government grant, which is given for immediate financial support, which is given for what? Only to that specific enterprise. Then they are treated as not other income, not like any other income. I said no, government grant should be shown as other income. Then that will not be treated as other income. It should be shown as extraordinary item. Under that you show it as an income. Clear? So any government grant which is received for immediate financial support should be treated as what item? Extraordinary item as per AS5. Number 1, refund of. Number 2, government grants received for immediate financial support should be treated as what? Extraordinary item. Show separately. See, when I say extraordinary item, it does not mean extraordinary journal entry, normal journal entry only. You have to show separately. You have to show what? Instead of doing fruit mixture and all, you have to separately show. Clear? And third one, what they are telling, see, for expenses, come on, what is that? For expenses and losses which I incurred for the previous accounting year, for that if I am receiving government grant in the current year, then it should be what? Disclosed at extraordinary item. For expenses and losses of the previous year, for that I am getting government grant in the current year, then that government grant which you are receiving in the current year for the previous year expense or losses should be treated as dash. Extraordinary item. What item? Clear? Now, when I started, there are 2 approaches, capital approach and income approach. Initially, these people were fighting. One set of people, they were like, no, it is a capital nature, take it to capitalism. One set of people are a dabba fellows, how it can be a capital nature without condition, who will give? So it should be treated like income approach. Then AS12 is giving clarity. Who is giving clarity? You people don't fight. If the grant, see, accounting for grant depends upon the nature. If the grant is of capital nature, if the grant is of what nature, then follow capital approach, take it to capitalism. Take it to where and all we have taken to capitalism, promoters contribution without condition, free of cost. If that is of capital nature, follow what approach? Capital approach, take it to capitalism. If anything other than capital nature is there, you have to follow what approach? Income approach. Means take it to P&L, defer and take it. What is that? On accrual basis. On what basis? This was the accounting treatment which I have written in the beginning. Clear? And lastly, disclosure. What is the disclosure? Accounting policy adopted for What all you have to disclose? What is the accounting policy we adopted? And there are many methods now. In that, what method you adopted, why you have adopted, why you have. Those who are so confident of getting the government grant, those who are so confident of getting, they will follow method number 1, cost of asset. In that they will adjust. In that they will. Those who are not having that confidence, assume they are the new companies, they will follow what? Deferred basis. They will follow what basis? Once it comes, we'll let us see. Once it is like, both the conditions are with, then I will pass the journal entry. With this, we have completed what? AS12 revision. Clear? In this, certain questions are there. In this past year questions, there are certain questions. Quickly, I'll run through. Listen to me, ma. See, Suraj Limited provides. What is that? Suraj Limited provides. I'm not going through full answers. Quickly, I'll run through. Listen. It received a government grant of 40% towards acquisition of machinery. Is there any notified area, backward areas? Then it is what based grant? So in answer, what you have to write? Either method 1 or method 2. Either method 1 or method 2. So fully alternative 1, this can be done. Alternative 2, this can be done. Like that you have to write. Clear? Second, we are receiving capital subsidy 150 from government for setting up a plant. Don't, by seeing that itself, we should not confirm what asset based grant. Again, method 1, method 2. What is the last one? The intention of the examiner is, it is treated like promoter's contribution. Then what entry we have to pass? Plant account debit to capital. So plant account debit to C also notified area. Straightly you pass this. Correct? Clear? Sometimes if you see certain answers, no, they will write this also. Alternately, asset, that also they will write. Clear? You play safely. You play what? Safely. You write this as well as what? Had it be treated as asset based grant, it can also be adjusted. Method 1 and method 2 can be followed. If you see this answer, both will be there. This also they'll write. Asset based also they'll write. Clear, Amma? Next, it is 5 lakhs from local authority for providing what? COVID vaccine. Expense based grant. What based? Expense revenue based grant, expense based, less than 1 year or more than 1 year. It can be adjusted with the expense or it can be shown as a separate income. Clear or not clear? And last one is also asset based grant. Method 1 or method number 2. Method 1 or what? Method number 2. Clear or not clear? Everyone? Hello? One last question. Not one last question. Listen, this question, AS12 and AS4. Read the question, everyone. Energy Limited acquired a generator on what? Generator on 1st April 2023. Correct? How many lakhs? It applied to government department. Correct? How much for subsidy? For how much subsidy? Where is that amount? They have not given. Okay. It applied to Indian Renewable Energy Development Authority for subsidy. Subsidy also granted on what? Or which year? 23-24. When is the last date? 31-3-24. Accounting year ends on 31-3-24. When they are receiving the grant? June. Correct? Assume beginning of June 1/6/2024. Correct? Yes or no? After finalization or before finalization? Appo, this information itself, if you are receiving after finalization, can I pass entry for this government grant or for this accounting year? Next accounting year? Can it be called as error? Not an error. Not an error as per AS4 and AS5. AS5 says these type of things are not called as prior period items. What items? Prior period items are errors or omissions. What is that? Errors or omission. This is not considered as omission or error. So not a prior period item. So don't account as per what? Prior period item. And AS4 also says it is not a non-adjusting event. It is not. It is a non-adjusting event. So don't recognize in the next year. That is what they would have said here. Clear or not clear? Hello, clear? And all this government grant, everything I would have told. This is one more question. For example, listen, there is a question. I'll just go through the highlights of the question. Clear? See, a specific government grant of how much? 15 lakhs was received. For what? And for acquiring plant. Plant cost is useful life. Grant received is credited as what? Deferred income. They are not adjusting. Correct? They are taking which method? Method 2. They are showing it as separate method. During 17-18, during what? 17-18 means after 3 years, for non-compliances, government grant has to be refunded. Government grant has to be refunded. On the date of refund, what is the DGG value? 10.5. What is the carrying amount? So DGG value 10.5. Carrying amount? What is the refund entry? Tell me. Refund journal entry. Tell me. DGG account debit, P&L account debit to bank account. How much we are receiving? 15. That is what we have to refund. Therefore, we have to refund 15 lakhs. DGG 10.5. Difference should be taken to what? P&L account. Difference should be taken to P&L account. And one more question they would have asked, had instead of adjusting in deferred income, had adjustment of cost is done, what is the journal entry? 15 lakhs, what is the entry? Asset account debit to bank. Asset account debit to asset, already it is showing what? 66.5. Add what also? And here itself they have said some other carrying amount they would have said separately. See, assuming, what is that? Assuming plant was showing a balance of, so it was showing a balance of 56. How much we are refunding? 15. Total carrying amount should be now, out of 10, 3 years gonna balance how many years? So 71 lakhs divided by 7 years. Each year how much? 10.14 lakhs. Clear or not clear? One last sum, with that we'll finish. Important sum. Listen. On 1st April 2016, MAC Limited received a government grant of, for acquiring a depreciable asset machinery. How much? Grant is 60. Cost of the plant is, that is machinery, is 300 lakhs. The grant is credited to cost of the asset. The estimated useful life is 10 years. Depreciation is on 10% WDV. 10% what DV? The company had to refund the grant in June 2019. In June what? 2019 due to non-compliance. How the refund is dealt in the books? Assuming the company did not charge depreciation for 1920. For the 2 months they did not charge. Pass the entry only for which year? Shall I start? Listen, 2 minutes. Come on, ma. What is the cost of the asset? Hey, they're asking only journal entry for the last year. Okay, don't start from day one. Ayyo, Mr. Account debit to bank. What is the requirement? You have to say. Always remember, requirement is important. Clear? So we have to find the carrying amount on June. We have to find what? Carrying amount on June on the date of refund. On the date of what? Refund. Listen, what is the acquisition cost? What is the government grant? What is the revised cost? So first year depreciation 10%. So 240 into 10%, 24. What is the carrying amount? 260. Next year depreciation 10%, 194. Next year depreciation 19.44. Correct agana? This is what data? 31st March 2019. When are we refunding? June. If nothing is given, assume in the beginning of the year. Assume in the, okay, from April to 1st June. How many months? April, May, June also included? Not included? Not in. How many months? So after 2 months. So 174.96 into 10% depreciation into 2 months depreciation. Correct? How much is the depreciation for 2 years? Therefore, what is the carrying amount on the date of refund? 172.044 on the date of refund. Repeat once again. Come on. On the date of refund, what is the asset? That is machinery carrying amount is 172.044. Correct? Now what is happening? We are refunding. We are what? Refunding. This is what method? Method 1 adjusted with the cost. Correct? Or we are showing it as deferred income adjusted with the cost. Then what is the refund entry? Tell me. Asset account debit to bank account. What is the name of the asset? Mission. Correct? Therefore, machinery account debit to bank account. How many is that? 60. So if I add 60, what is the revised value now? 232.044. Yes or no? Listen. This is happening in which year? 1920. They are also asking journal entry for 1920. Correct? What is the refund entry you said? Machinery account debit to bank account. What is that? Correct? Then we have to charge depreciation. Correct? Out of 12 months, first 2 months we are providing depreciation. What is the first 2 months depreciation? 2. Correct? So 2.916. Still how many more months to go? 10 more months. 10 months, the revised depreciation should be calculated on what number? Revised amount. What is the revised amount? 232. Correct? Therefore, the revised amount is 232.044, 10% into 10 by 12. So from June to March, what is the depreciation? So first 2 months, next 10 months. Total depreciation is 22.253. Total depreciation is what? So what is the journal entry? Tell me. Depreciation account debit to machinery account. What is that? 10 months. Total depreciation which I have to take it to P&L is what? 22.253. 22.253. With this we are completing what? AS12 exhaustively. Clear or not clear? Mark my word, you will get all the answers perfectly. Clear? Thank you so much, Kana.